esta manera me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Worst case scenario is a double-dip recession. It's not our base case, but it's a worst case scenario.
Investors who are expressing their views are starting to show more bearish sentiment.
What happens to fiscal policy as we go into 2021 is going to be important.
We know there are millions unemployed, but the unemployment stats are everywhere.
We don't have to torture the data. The data's torturing us.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us. A simulcast on Bloomberg Radio and Bloomberg Television. Bloomberg Surveillance and the news flow just continues. We slid into Saturday. It was quiet. It was calm. John took me off the ledge there over the Tots. Arsenal tonight for Lisa. It's too much. It was great. And then Sunday evening, a bombshell, John Farrow, from the New York Times.
I never thought we'd start an hour with English football, but we seem to do this quite often now. A bombshell from the New York Times, Tom. How many times have we used that word over the last 4 years?
This time it's real.
And I don't want it to be the story, Tom, but let's talk about whether it is real or not. I understand that it's an important story. I understand it's sensitive for many people in America, but far too often there has been a highlight reel of news anchors sitting there, Tom, saying the word bombshell, and it's done nothing to the polling of the President of the United States. Are you convinced this will?
Oh, no, not at all. And Kevin Cirilli making very clear he felt it wouldn't have much effect on the very, very few, if any, undecided as well. But certainly the granularity of the report and the comment from the New York Times that there would be comments to come was important. Timothy O'Brien scheduled to be with Bloomberg Surveillance on radio here in the 9 o'clock hour. John, in the markets, up. If we get talking, we're going to be up 50 points on SPX. Right now, up 44 points.
Really strong bid to kick things off on Monday. I'll whip through some of the price action for you very quickly, starting with the US equity market. Futures with a nice lift, a huge rally over in Frankfurt, Germany. One of the biggest weekly losses we've seen for several months over in Germany. The DAX bouncing back big time over in Frankfurt. The DAX is up by 2.86%. That risk appetite improves. You know the story. The dog is risk appetite. The tail is the US dollar. That means the dollar is weaker this morning against everything at G10. Euro dollar 116.74. Commodities just with a subtle lift. Not a big one here. $40.35 on WTI crude. This morning is last week in reverse, but I think the story, the broader story, are the concerns of last week. And just because we're up this morning, Tom, doesn't mean those concerns have gone anywhere. They're still front and centre.
Down about 7% on the Standard & Poor's 500, above that 10% correction level. Lisa, on the economics and linking it into the fixed income market, forgetting about stimulus, which I think we could all agree has been pushed aside. That jobs report this Friday, maybe we'll get some information out of it, but I would suggest claims on Thursday is still a great mystery.
Yeah, and I think that really even claims data is becoming fuzzier and fuzzier and harder to read. I mean, Mike McKee has been really good on how much noise there is around some of these jobless reports. I will say, Tom, one of my main questions as we head toward November 3rd is, given the uncertainty, what's a defensive asset? Right? I mean, we're not seeing necessarily the bid into treasuries the way that we had in the past as people get risk off. If people go to cash, what makes them move out of that? Defensive assets, traditionally defensive assets, are underperforming the most in almost a decade.
John, she's just going right after me on that, isn't she? I mean, she's just getting pumped
Your
up.
fund's been getting inflows. I've heard that you've been getting tons of inflows, Tom, away from treasuries.
She knows I'm looking for an entry point. Well, let's do this. Let's start the conversation. I want John to bring in Lale here because they know each other. From John's Property, the real yield. Look for that, folks. Fridays on Bloomberg Television. And John, what's so important here is amateurs look at the single point yield, and pros like Lale look at the spread market and the difference in yields out across time and across credit quality as well.
Lale wasn't available on Friday and she couldn't make the 9 Eastern show, so this was third choice for Lale. So I'm happy to have Lale with us this morning, and I can share her with you.
And I was third choice too.
Thanks a lot, John.
JOHCM Senior Fund Manager joins us right now. Lale, great to catch up. You've got that dashboard. You're looking at high yield spreads. We've had a move of about 40 basis points over the last week or so. When does it start to say buy again to you?
Well, I was just going to pitch for Tom's triple levered cash funds over here.
Is that what you're doing? Cash?
No. I mean, we're keeping our cash reserves, right? The reality is cash is king, right? Don't let anybody tell you anything else, because as you and I, we've spoken about this, there's no such thing as cash on the sidelines, and liquidity in the markets are poor. So for people to be opportunistic, to take advantage of dislocations, you have to have cash. Whether that's cash or you're sitting in treasuries, you need to have something that's immediately sellable. And unfortunately, credit is not one of those asset classes. So the way we are looking at it is really, in our view, high yield still screens expensive, but the key theme in high yield is play the refinancing. So these double Bs and single Bs that are in defensive, that have yield to call paper that, believe it or not, only maybe yields more than 5.5%. 5.5% coupon is now quote unquote high coupon. They are in the market to refinance. And I think for us, that's the last hurrah in high yield to capture a little bit more income than investment grade before perhaps we turn even more bearish on high yield. It's subject to economic recovery.
So, Lale, you would turn even more bearish. What kind of spread are you looking for on high yield potentially at the moment? At the moment, we're about 540. What kind of levels are you waiting for?
Well, 540, it's misleading, right? It has double Bs that trade in 200 and 300 range that everybody else is hiding out. And then you have the industries that are at the epicenter of recovery, leisure, entertainment, transportation, that trades, multiples of that, right? So half of the high yield index is subject to the recovery. So you have to be really careful how you pick your spots in this. I mean, the example I'll give you, you just said the high yield markets are wider by 40 and 50 basis points over the last week. The recovery themes last week widened 3x that, right? So when you are entering at this point in time, knowing what you know, you have to be really careful, because the upside downside is just not justified. So fair value high yield, believe it or not, I think it's still in the 700s.
Lale, this raises a really good point, which John touched on earlier, which is the market is wondering what more the Fed could do to backstop credit, given how much they've done already. And have we reached this point, Lale, where any Fed put is baked in, and any additional purchases they do will be peripheral and won't make a material difference on spread narrowing?
I mean, the market will respond to incremental news, as you guys highlight. So I think the Fed put is baked in. I mean, you know that their purchases have slowed down, but that's in line with their statement. And I think there will be there to backstop the market. But remember, they're actually predominantly backstopping investment grade. They are backstopping high yield very little through the high yield ETFs and the fallen angels. That's a very different dynamic. And again, it opened the refinancing gates for the higher quality. There's very little near-term maturity that's left for the high-yield companies. If anything, actually, look at the headlines in the last 2 weeks. The quality companies are going for M&A, LBO, and strategic financing. So credit, nobody works for the bondholders, right? Everybody works for the equity holders. And I think that's the risk you take now on the higher quality. The focus is going to shift.
What's so important here, folks, is that Bloomberg's got lots of fancy stuff that Lale's really good at. One of them is HZ1, the Horizon Analysis Chart. Lale, I just put in the thing Farrell bought a couple years ago, which is a 98-year Austrian piece, and he's made 121%. That's why Farrell's looking in Notting Hill. I mean, he's killed it with that Austrian bond, 100 to, I think, 211. Then rates will go the other way. Explain to our audience what happens if we actually get yield up, price down. What does that do to the horizon analysis?
I mean, that's the problem with the broader investment grade markets, right? I mean, the lower coupons meant every company was issuing longer and longer. And as a result, I mean, I think this is also one of Lisa's favorite charts. If you look at the average duration in the indices, in the global ag indices, it's over 8.5 years. And look at the spreads, which are not tight. Divide them by the 2, it gives you your break-even point. And if you looked at it historically, it's around 12 basis points on the break-even point. That is your resistance point. And some of these investment-grade companies, you're not getting paid for the credit risk. So increasingly, you're taking not only credit risk, but you're also taking a rate risk. And that could be very dangerous. Now, rates may never rise. That's entirely possible. But people have to walk into this trade eyes wide open.
Lale, just a final question from me. When you say 700 basis points fair value, is that what you just think fair value is, or where you think spreads are going?
Always the tricky questions. I think that's where the spreads should be going. If the economic recovery doesn't happen, vaccine doesn't turn out to be anything in as an immediate catalyst, some of these industries in that 50% cohort that I've talked about in the high yield industry, they are structurally and secularly challenged. They're either going to go out of business, or they're going to run at 50 to 70% capacity, which means you have to start baking in capital impairment to the bonds, which are not being baked in at this point in time.
Lale, great to catch up, as always. Always enjoy catching up. Lale Topchali there of JOHCM. 163 basis points away on that call. And Tom Keene, I've got to say, if we were there at 700, the Fed speak we're about to hear this week would be very different, I think, to the Fed speak we'll get.
Well, again, the nominal yield, 4 digits. We do 4 digits, folks, on Monday, 0.6692. We forget, talking to a bond pro like Lale, John, this is just a totally wacko market. I mean, these nominal yields aren't normal. There's no other way to put it. I mentioned the Austrian piece you own, John, just because it goes out to, I think it's 2,118 or maybe 17.
Something like that. There's a lesson here, isn't there? Never tell Tom where you may or may not be living, because he will disclose that live
John,
on air.
Come on, John.
To everybody.
Repeatedly.
I mean, you popped so much on that Austrian piece, you made up for the debacle known as Lyft. Remember when you got the 8,000 shares of Lyft?
I wish. I wish.
Yeah.
I wish.
Look at those
I wouldn't
markets.
be here.
100 to 211. You can't, seriously.
That is my out.
But Lisa, this is serious. You can't make money in bonds. 100 to 211.
Let's look at those markets. Equity futures up 46. We advanced 1.4%. You know what this is?
Rid of VAR.
This is Bloomberg surveillance.
Quote on VAR. VAR.
With the First Word News, I'm Ritika Gupta. President Trump is denouncing a blockbuster report on his taxes as fake news. According to the New York Times, the president paid just $750 in U.S. income taxes in both 2016 and 2017. The paper says he reported losing millions of dollars from his golf courses and has hundreds of millions in debt that's coming due. The Times analyzed at least 2 decades worth of the president's personal and business tax returns. Democrats are previewing the tactics they'll use to oppose the confirmation of Supreme Court nominee Amy Coney Barrett. They're zeroing in on the risk to Americans' healthcare coverage. The Supreme Court will hear a case in November that could lead to Obamacare being ended. Regardless, Barrett's confirmation seems assured because Republicans have a majority in the Senate. The Trump administration has suffered a setback in its showdown with TikTok. A federal judge has temporarily blocked President Trump's ban on new downloads of the video sharing network. TikTok was due to be removed from U.S. app stores by midnight. Meanwhile, the judge refused to halt the November deadline for the sale of TikTok's U.S. unit. The UK and the European Union are starting a crucial week of Brexit talks. EU officials are stiffening their demands over how any trade deal will be enforced. They've lost trust in British Prime Minister Boris Johnson because of his attempt to rewrite last year's exit agreement. Still, both sides are holding out hope that a deal can be reached. And a big victory for Uber in the UK. A London judge ruled that the ride-hailing service is, quote, fit and proper to operate in the city. Last year, regulators revoked Uber's license to operate in London over safety concerns. But the company's cars were allowed to continue to pick up riders during a court review. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Most people that I know would do everything they can to not pay additional taxes. So I think we can have a debate about our progressive tax system, whether there are loopholes that need to be closed, and we can and should have that debate. We have it all the time. But again, I don't call it immoral. I don't want to pay $1 extra in taxes that I don't have to either.
Michael Waltz there, the Republican from Florida's 6th District. More on those comments in just a moment. From New York and London this morning, good morning to you all. 1 hour and 12 minutes away from the opening bell, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. New York stateside, equity futures up and up nicely, a bit beneath the S&P 500. Futures advancing around about 40-odd points all through the last few hours. Now session highs up 46 and advancing about 1.4%. Nice rally over in Europe as well. On the equity benchmark in Frankfurt, Germany, we bounced back there after an ugly week of losses on the DAX. The DAX up by about 3 percentage points now. You see that captured in foreign exchange, weaker dollar, stronger euro dollar 116.70 odd. And in the bond market, yields doing a whole lot of nothing. Curve steeper, up about a basis point, 0.67% is your yield on a 10-year Treasury, Tom.
And, John, the real persistency here to me is a story. It's been lifting up 20-some points earlier, and we've basically doubled that through the morning here. SPX 3333 on the Standard & Poor's 500. Call it a 7% correction from the highs. Right now, from the 2nd District in Arkansas, this week of politics, we love speaking to the Vanderbilt economist, French Hill. He joins us, of course, from Arkansas, from a place that is very much pro this president. French Hill, I want to talk about the Delta Bank of Arkansas. You are a banker at heart. What do you do when somebody comes in with loan documents like what the New York Times is saying of the president? I mean, this is odd financial statements, to say the least. Forget about the morality that Congressman Waltz of Florida was talking about. Just on a sheer doing business, have you ever done a business with someone like the president of the United States?
Well, Tom, good morning. Thanks for having me. When you look at real estate investors, our tax code really encourages real estate investment and treats it quite favorably. And when you make real estate loans and review financial statements of somebody who's a real estate developer, then you're going to be looking at cash flow and how cash is being used, because there are very few reported profits in a lot of real estate companies, particularly that use partnership or do a lot of upfront costs and a lot of upfront development every year. It's that development trail that causes a lot of those tax offsets for the net profits.
Will you expect to see the Vice President, Mr. Biden, really be aggressive about this tomorrow night? Does he use this as a weapon, or does he move on to the topics that matter nationally into your 2nd Congressional District of Arkansas?
I think Vice President Biden will go on the attack and contrast strongly the things he disagrees with the Trump administration. I think he'll probably stick to policy, but since he opened up yesterday in Wilmington with the health care topic, I think that'll be a principal topic because of the Supreme Court nomination, because of the efforts to change Obamacare that we've made in the Congress over the last few years. But I don't put it past Joe Biden from talking taxes.
Congressman, while we wait for November 3rd to come around, there's a question about what will happen after that date. And Mitch McConnell, Senate leader, has come out and said that there will be an orderly and peaceful transition of power. What will you do if you agree with Mitch McConnell about that, if President Trump does not concede or is unwilling to go along with a peaceful transfer of power?
Well, you know, all of our elections are controlled by our states. I think Americans who were actively watching the presidential election watched that play out in 2000 with Gore v. Bush and the efforts in Florida to recount ballots. So this will play out state by state. I, too, expect that we'll have a peaceful transfer of power in the inauguration of Donald Trump on the 20th of January. But look, this is going to have some challenges potentially in the states, and we'll just have to wait and see how that goes. There are lawyers on both sides to make sure every American vote counts. I would just urge Americans to vote early and mail their ballot early so that there's no controversy that their vote will be counted if they're going to vote absentee.
Okay, but absent faith alone, faith in the peaceful transfer, are you making any preparations, or other lawmakers, Republicans in particular, making preparations in the case that there is not likely to be a peaceful transfer of power?
Not that I'm aware of, because I don't think anybody expects that to be the case. I think people expect the vote to come in and be counted, and that we'll have a new president in January.
French Hill, I want to talk to you about stimulus. There's a wide presumption there'll be stimulus after the first of the year. It's been by all accounts, a disaster. Certainly Jerome Powell suggests it's a disaster that we haven't seen a stimulus. What kind of stimulus would be most efficacious for whomever wins the presidency? What's needed right now?
Yeah, well, when you see the functioning of the markets and the access to both large corporations and public finance entities to be able to attack funding in the markets, it's really small business that operates in the realm that's still struggling. Either it's a closed down economy by state decision, or they're in a market like restaurants or hospitality that are still struggling. So for me, the most important thing is to extend the Paycheck Protection Program. We have $138 billion not spent in that program already appropriated. That's been blocked by the negotiations between Speaker Pelosi and the Treasury Secretary. We have a discharge petition on the House floor this week to try to get that bill through the House and over to the Senate with 218 votes, at least in the House. So I think small business is where I would focus that stimulus, Tom. And also families, we've only clawed back about 50% of the jobs back from the sharp decline in April. And therefore, we need to have a compromise on both the unemployment compensation issue and any other support for our families.
Congressman, lucky to have you on the show this morning. Looking forward to getting you back. Congressman French Hill there, joining us on the latest effort down in D.C. on the fiscal side, and on that report from the New York Times over the weekend into Monday morning. Yeah. Into Monday morning we go with equity futures up 48, Tom. S&P 500 futures up around about 1.4%. We just keep adding a little bit more weight to the S&P 500 as this session grows older. But I think you nailed it, Tom, on a fiscal debate. Still a huge gap between Republicans and Democrats down in Washington.
Did you notice the word he used there, John? It was compromise. I mean, you know.
No, I thought you heard me say that you nailed it there, Tom. But sure, compromise. Where is the compromise in Washington?
It's just not there. There's just, it's childish. And I mean, Lisa and I see it where we are in New York. I mean, I would suggest there is a desperation out there, whatever the employment numbers are, John. I mean,
I would say there's
really
going to be
pretty grim.
Tom, let me be clear about it. Here in the United Kingdom, there is a huge worry about the job losses that will come about when that fiscal support evolves in the coming months here in the United Kingdom. Much more still to come on that from New York and London. Good morning to you all. This Monday morning, equity futures with a bid. The S&P 500 rallying by about 1.4%. This is Bloomberg Surveillance live on Bloomberg TV and radio.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
There is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Counting you down to the opening bell in New York City with equity futures getting a nice little lift this morning, flying out of the gate in Europe, a rally over in Frankfurt, Germany, and a lift on the S&P 500. Here's the price action, up 48 on the S&P. We advanced 1.4%. In the FX market, euro dollar 116.70, firmer by a third of 1%. That's a weaker dollar. And let's just get to a charter cable because pound sterling has been all over the place in the last week, trapped between seemingly Brexit roulette and the latest COVID restrictions. We've had a 129 handle last week, recaptured it briefly this morning. We've been as low as around about 126 last week as well. Tom, we've been all over the place off the back of COVID restrictions, not great for this economy. Then some happy talk going into Brexit negotiations later this week, and we get a nice bid beneath sterling. It's the outperformer in G10 through much of this morning.
It shows the confusion out there, and certainly the last month we saw it, and here into the end of the third quarter we see it more and more again. Economic data this week, of course, coming up on the unemployment rate. What John, Lisa, and I know is it's always a problem to deal with Dr. Coronado with macro policy perspectives. Julia Coronado writes research notes where you read them, but she has exquisite charts within her note. And Dr. Coronado, you have a chart jaw-dropping on the expansion of the Fed's balance sheet. Let me ask you the question I asked in 08, 12, 16, and now here in 2020. What is the process for the Federal Reserve System to bring their balance sheet into order, into line?
Well, Tom, first you'd have to define what that means. I think that the Fed's view of the balance sheet has changed relative to the years you cited. It now recognizes the balance sheet as one of its main tools of policy, not just something to use in case of emergency. So when you hear Jay Powell in front of Congress and he's asked about the future of the balance sheet, he says, we may not ever need to shrink it. We may need to just stop expanding at some point and let the economy grow into it. So I think that they're done with taper tantrums and, actually shrinking the balance sheet. I think when the economy is on a glide path and in a self-sustaining mode, they just sort of phase out of the purchases.
And Julia Coronado, folks, goes to the heart of the matter, which is the belief that we will grow our way out of this natural disaster. What's your timeline, Julia, to get back to normal?
I think the fiscal policy gyrations have probably delayed that. So I'm looking at 2022 before we're sort of back to where we were. I think we've got a difficult phase ahead of us, depending on how the election unfolds. I don't expect a fiscal package before. And as you were talking in the previous segment, we've got a wave of small businesses, restaurants, retail. We've got the airlines, a lot of businesses where the support is running out and the recovery is still stalled for them. And so we could see another wave of layoffs or at a minimum the end of the rehiring that we've enjoyed through the summer. And that could really slow progress down. So, the prospects for fiscal policy really depend on the outcome of the election, and that may be, contested or sometime in coming. So it really is 2021 before we're looking at the possibility of meaningful fiscal support, I believe.
Julia, financial conditions can smell it They got the sense of it in the last couple of weeks. We've tightened up a little bit. I just wonder from your perspective, the distinction between a Federal Reserve managing market functioning and massaging financial conditions. What does policy look like when they start to do the latter?
Yeah, that's a great question because I'm not even sure, we listen to Fed speakers and they're not even really all on the same page when it comes to asset purchases. They're not really sure exactly how they work. They know they work. They're very effective in supporting financial conditions. But how do you transition from that emergency setting into just kind of an ongoing support? I think for now, we're looking at them just holding the purchases at the current pace for a while. And again, we need clarity on the recovery and some sort of sense of a self-sustaining dynamic taking root before they even contemplate, or as Powell says, thinking about stepping away from the current pace of purchases. But they've communicated that very fuzzily because they all sort of see it differently. Some see it as signaling, some see it as portfolio balance channels. And I think for me, it's all of the above, and they're not willing to mess with success right now. So I don't think we're going to see them even, attempting to back away from where they are right now.
So we've got a good idea of what success looks like. Let's talk about what failure would start to look like. They've all got the same things on the dashboard, Julia, and I hate to ask the juvenile question, but from your perspective, as you look at markets right now, have you got levels in mind? If you start to widen out by 100 basis points, 150, is that enough to test this Fed's patience? You're talking about credit spreads? Yeah, high-yield spreads at the moment. We had a 40 basis point move last week. It's not ginormous. I'm just trying to get my hands around where you think the Fed would start to worry a little bit, Julia. Yeah, no, I think you're right. I mean, I think if we saw 150 basis point widening, and again, it's not just the level of the spread, but the pace at which it's widening and the conditions around which that's happening. But of course, Jonathan, we know that they've got that facility up and running. The corporate credit facility in both the primary and secondary market is ready to step in at any time. And that in and of itself keeps those spreads from widening tremendously. So they've actually put this automatic stabilizer in place in the corporate credit market. And, it serves as a sort of discipline or lack of discipline mechanism, depending on how you're looking at it. But it really has prevented that equity, nervousness and volatility from spreading directly into corporate credit. And that facility is not going anywhere. So again, if they need to step in, they can just amplify those purchases a bit more, both the ETFs and step up the primary purchases as well. So that's there as a tool ready to go if they need to. Yeah, I got to say, don't mess with success. There is a question of whether success really is anesthetizing the credit function as signaling some sort of corporate distress. Julia, I'm looking right now at a Federal Reserve balance sheet, about $7.1 trillion. What's the ceiling for that in the near term? The pace of that expansion has slowed down pretty dramatically because in fact, we've plateaued in the last couple of months because the emergency liquidity facilities, the dollar swap lines, the repo operations, the various liquidity facilities, they're all shrinking. They're actually, they've shrunk by several hundred billion. So that's offset the ongoing expansion. I think what we're going to settle into now is a sort of more gradual, steady pace of expansion. I don't think that there's a hard limit. And I think you use a good word, anesthetizing. That's kind of exactly what they're doing for now. We're still in this acute phase. They're not nearly as sanguine as market conditions would suggest investors are about the outlook. They're very worried about a second wave, turmoil around the election, another wave of layoffs. So again, until we get that an accumulation of evidence that we're in a self-sustaining recovery, I think they keep that pedal not to the metal, but on, steady expansion. And Julia, to that point, when you said the second round of layoffs, is anything the Fed is currently doing, is anything actually keeping jobs in the system or suppressing the jobless rate?
I think the most direct transmission we see from the Fed's policy to jobs is through the housing market. So we know that low rates are stimulating demand for housing. That's been incredibly robust. We've seen the construction sector rehiring, and certain segments of the economy, like the home improvement stores, are hiring, and they are doing well. So, that's the direct transmission. And the Fed is the first to recognize the bluntness and the inefficacy of a lot of its tools in creating jobs, and has been effectively begging for fiscal policy. They're extremely worried that they will not be able to do their job, and are asking Congress to do theirs. And, of course, they're not.
Julia, what's your working unemployment rate?
For Friday?
No, I don't mean for Friday. I mean all in. I mean, there's a huge mystery about claims of different programs, who's getting counted, et cetera. Are we really at 8.2, 8.3%?
No. I think the household survey is clearly the lower bound of where we are. I mean, one, we know there's some misclassification within that survey. We also know there's double counting and fraudulent issues with claims. So I kind of, squaring the circle, I come somewhere in between, which would put us around a, 12 to 15% unemployment rate. I think that's the reality on the ground. And I think, we really need to triangulate these numbers, and it's really hard right now, but I think, the official unemployment rate is the lower bound.
John, I'm sorry, but like every 42 minutes we have to say what she just said. I mean, I don't think it's said enough.
You can say it. You can repeat it through
12
the
to
show,
15%. Those are ginormous numbers.
They are ginormous.
Julia, great to catch up. Appreciate it. Julia Coronado there of Macro Policy Perspectives, the president and founder. Tom Keene, you mentioned the data later this week. Payrolls Friday just around the corner for the month of September. Here are the numbers so far. Moving target, of course, but our survey so far, the median estimate, 850K on a headline number. Unemployment, I think this is what you were getting to, Tom. 8.2% is the estimate at the moment. 8.4% is the previous read, but 8.2% is what many economists seem to think this will drop to this coming Friday, Tom.
I just think it's a fiction. I mean, we'll report it. It's good numbers, and BLS does as best as they can with it. But, I look, John, at the Economic Policy Institute, which is a labor and, has a Democrat Party feel to it. But Heidi Shearholz and her team have done a great job trying to juxtapose all these different government programs. You have Mark Zandi at 14%, Julia Coronado even worse.
You want to talk about a fiction? Unemployment in the UK at just north of 4%. Really? Does anyone think unemployment in the United Kingdom is just north of 4%? Wait until what it looks like when these fiscal provisions come back. Tom, it's going to be ugly. It's going to be really painful for a lot of people.
Can they unemploy the VAR operators? I think that would be, a good start. They could.
You haven't talked about it yet. Do you want to just let it out and explain to our listeners, the other 50% that hasn't got a clue what you're talking about?
There are stupid things in American sport. John, explain how they're ruining your game.
There is a video assistant referee in English football now who is making terrible, terrible decisions for Tom Keene's Tottenham Hotspurs. And right at the end of the game over the weekend, awarded a penalty to Newcastle for a handball that Eric Dyer couldn't even see because he had his back turned to the ball. So Tom's unhappy this morning.
How did that happen?
Things happen. Look, Newcastle fans are happy. Markets go down, markets go up, Tom.
No,
markets go down, someone's unhappy, someone's happy. There's always someone on the other side of the trade. Remember that. Coming up next, Dr. Peter Hotez of Baylor College. Looking forward to that from New York and London.
Yes.
This is Bloomberg.
With the First Word News, I'm Ritika Gupta. A blockbuster new report says President Trump paid just $750 in U.S. income taxes in 2016 and 2017. According to the New York Times, the president reported losing millions of dollars on his golf courses. Plus, he reportedly has hundreds of millions in debt that will come due the next few years. The president called the report fake news. He told reporters he pays a lot but didn't offer any specifics. Senate Republicans have signaled there will be a quick confirmation process for Supreme Court nominee Amy Coney Barrett. Hearings would begin in about 2 weeks, and President Trump is optimistic that Barrett could be seated on the High Court before Election Day, November 3rd. Almost 200,000 people in Northern California had their power cut because of the threat of wildfires. PG&E is trying to keep its power lines from starting new blazes. The utility went bankrupt last year after its equipment ignited catastrophic fires. Wildfires in California burned thousands of acres in the last month. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Live coverage of the first presidential debate begins Tuesday night at 8:30 p.m. Eastern Time on Bloomberg Television and on Bloomberg Radio.
Are people afraid of calling you because their own credit ratings might go down if it's known that they have to borrow money from the IMF?
If you're a president of a country in trouble, you better call.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
That I'm signing today will guarantee restaurants operate, will not allow closures. They can operate at a minimum of 50% regardless of local rule. And then if a local restricts between 50 and 100, they've got to provide the justification and they've got to identify what the costs are involved with doing that are.
What is and what is not safe? The governor of Florida, Ron DeSantis, on a 50% capacity floor, and then you get to play with the other 50% at a local level. Tom Keene, it's been very confusing over the last week, particularly here in the UK. Not going for a capacity restriction, but going for a time restriction, 10 p.m. is the cut-off time. And I don't know if you saw the pictures across the United Kingdom of what happens in some of these cities after 10 p.m. now. Many people run to the local store and get some alcohol and carry on partying outside. There's clearly a problem. It's not gone away.
It is absolutely bizarre. It is. I'm really glad we ran that tape of the governor of Florida there. He was out at 100%, and they've backed it off to sort of a 50-50 agreement. Of course, this is a huge topic in New York. We welcome all of you. John, I know you've got Diana Omoa on coming up. Why don't you tell us about that?
Looking forward to that. Big calls coming out of several banks on emerging markets, Tom. Some saying pull back, some saying get in. I can tell you Diana Omoa has a more constructive view on EM, and I'm looking forward to catching up with her a little bit later this morning.
That'll be important. She's always razor sharp smart, really quite good. Right now, we advance the dialogue on vaccines, on this terrible pandemic. He was with us early in February, way out front, of course, and no surprise, Peter Hotez of Baylor College and their National School of Tropical Medicine. Dean Hotez, thank you so much for joining us again. I want to go right into the nitty-gritty here of what you do, which is you get $1 million grant from the good people at Tito's Vodka, pool it together with a bunch of other donations, get a guy from India to come in as well, and you take baker's yeast, which is used in the hepatitis vaccine, to come up with traditional medicine vaccine. How is that process going of using truly traditional vaccine development to get a cure for this terrible pandemic?
Well, thanks for that question, Tom. There's a lot to unpack there. First of all, if you order a vodka drink, you definitely want to specify Tito's Vodka. But beyond that, what we did was we signed a licensing agreement between Baylor College of Medicine and this amazing vaccine producer called Biological E. It's not a household term in the U.S. and Europe, at least yet, but they're one of the big producers, and they're working to scale up 1 billion doses of the vaccine that we developed early on at Texas Children's and Baylor College of Medicine. So that's really exciting for us. We've never made 1 billion of anything before, and it's not quite baker's yeast. It's you can use baker's yeast for some vaccines, but for this one, it's a different type of yeast called Pichia, and we're scaling up production. And the hope is that it could be just like the hepatitis B vaccine, which you can make for $1, $2 a dose, and you can make it all over the world. It's made in Brazil. The hepatitis B vaccine is made in Brazil, and Cuba, and India, and Indonesia. Right. So the hope is that this will become the first low-cost global health vaccine.
How do you respond to the different sciences here of modern vaccine virology, the ones that are complex, the ones that are new, the ones that are unproven as you take a more traditional route?
Well, I kind of like the innovation, and I like the mixture of the innovation and the traditional, especially if you're trying to work quickly and trying to get a vaccine out as fast as you can by trying different technologies, because you don't know what's going to wind up working best in people in terms of inducing a protective immune response and protection and safety. So by trying the different technologies, you get multiple shots on goal and increases your likelihood of success. So it spans the gamut from really cutting edge, unproven technologies like the mRNA vaccine or the DNA vaccine approach or adenovirus to sort of old school stuff that we're doing, like a recombinant protein in yeast or inactivated virus vaccines. And the hope is that we'll get multiple vaccines that both work and are safe. And because if you want to vaccinate the world, we've got to move quickly.
Dr. Hotez, Tom Keene will ask you about yeast and creating the nitty-gritty of the vaccine, and I'll ask you, when can we get back to normal? And the way that I'm wondering is I'm looking at how China is giving an unproven vaccine to thousands of individuals in that country. What is the potential consequence of doing this, and should we do it if the consequences aren't that bad?
Well, the consequences of getting it wrong are substantial. I mean, if you wind up putting a vaccine out there that turns out not to be safe or doesn't work as well as you thought, that undermines vaccine confidence. And we've seen that happen before. We saw it happen last year in the Philippines, where there was loss of confidence because of a new vaccine that was introduced. And we and parents wound up vaccinating their kids against measles, and they had a catastrophic measles epidemic that led to thousands of the deaths of kids. And so, vaccines are a special type of pharmaceutical in that the ecosystem is very fragile, and it doesn't take much to undermine confidence. Even if it's a good vaccine, it can still get voted off the island. I mean, we've seen that happen with the GSK Lyme disease vaccine. It was a good vaccine, but because of public perception, it tanked, and that was true of one of the rotavirus vaccines as well. So history is littered with good vaccines that are never used because of public perception. So that's really important.
And meanwhile, as we wait over the next 3 months, a lot of people are expecting a second and third wave of the virus. What's that going to look like?
Yeah, I'm very worried about this fall, Lisa. We're starting to see an uptick now in the northern part of the Midwest, in Wisconsin and the Dakotas, and I'm wondering if this is the beginning of that big fall surge that everyone's predicting. And it has two consequences. One, especially in the northern states where people are indoors a lot, I'm worried, and that'll include coming back potentially to New York and Boston and of course the UK. But also now there's some new data that came out over the summer saying that for reasons that we don't entirely understand, the severity of the illness goes up in cold weather as well. So it's not just the numbers, it's the quality. Right. You remember back in New York in March and April how terrible it was. That may be more than just a learning curve in how to take care of patients. There might be something about the cold that's giving higher virus inoculum. Right. We don't really understand it, so that's something to look out for also.
Dr. Hotez, I want you to address now on radio and television people that question whether they should be giving flu shots or pneumonia shots, bacteria, virus, whatever, to their kids, to their loved ones as well. Address the efficacy and safety of these common shots.
Well, they're life-saving. Remember that measles epidemic that you had in New York last year in 2019. That landed 50 in the hospital, including 18 in the intensive care unit. I mean, we don't make vaccines for diseases lightly. We do it because they're serious pathogens and serious illnesses. Same with influenza, which up until COVID-19 was typically one of the single largest killers of people around infectious diseases. So you want to take those illnesses off the table by getting them vaccinated. The problem is there's a very aggressive anti-vaccine movement out there that actually started in the UK, but it was amplified like only Americans can, and it was really revved up in the United States, and it's causing a lot of damage right now. Well, so it's hard to download anything but misinformation. So you have to be careful.
We've got to leave it there. Dr. Hotez, thank you so much. Peter Hotez, truly one of our leaders in this pandemic of Baylor College of Medicine. Lisa, future's up. If we keep going, Lisa, we'll get over 50. We're not there yet.
No, and it's unclear exactly how long-lasting this is going to be. Volatility still abounding.
We will see. Futures up 48, Dow futures up 382. With David Weston, the former governor of the Commonwealth of Massachusetts.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London, for our audience worldwide, good morning, good morning. This is the countdown to the open with 30 minutes until the opening bell. Equity futures up by 1.4%. We advance 47 points. We begin with a big issue. 24 hours away, President Trump and former Vice President Joe Biden taking the stage in Cleveland, facing off for the first time ahead of the November election.
A lot of things are going to come up in the debate. The son didn't have a job. He had some big difficulties, and then all of a sudden he's making millions of dollars as soon as his father becomes vice president. No, I think that'll come up. I don't think Joe can answer it, frankly.
American people understand the urgency of this moment. They're already voting in droves because they know their health care hangs in the balance. They understand that if Donald Trump gets his way, they could lose their right to vote, their right to clean air and water, their right to equal pay for equal work. People are voting right now because they know the very soul of this country is at stake.
Political pundits arguing the bar is low for Biden's performance, questioning his delivery, his energy, the president even questioning his cognitive ability. Market participants, they could say his stock is already riding high. The downside is large going into earnings season. The polling by the Washington Post and ABC News giving Biden a 10 percentage point advantage over Trump. A New York Times Siena College poll had his lead at 8. Joining us now to go through the noise and the news down in D.C. is Bloomberg's Kevin Cirilli. Kevin, trying to work out the noise and the news right now, and the distinction between the two is getting harder and harder as the weeks pass by.
Well, Democratic presidential nominee Joe Biden heads into tomorrow night's debate with a clear polling advantage. And this, of course, comes as a new report in the New York Times raising questions about just how much taxes President Trump paid both as president as well as a private citizen. Let's pull up a little bit of that report. That's the talk of the town in Washington this morning. President Trump paid $750 in federal income taxes the year he won the presidency. They go on to report that he paid another $107.50 in his first year of the White House, and that he paid no income taxes at all in the 10 of the previous 15 years, largely because he reported losing much more money than he made. Take a listen to how the president answered questions about that report yesterday.
Totally fake news. No, actually, I paid tax, and you'll see that as soon as my tax returns. It's under audit. They've been under audit for a long time. The IRS does not treat me well.
Now, Jonathan, I'm told by sources in both campaigns that both the nominee Biden as well as President Trump will use this as an opportunity to pivot to tax policy. The president polls ahead of Biden on the issue of handling the economy. However, he trails significantly on his handling with regards to the pandemic.
He might get one thing he really wants, Kevin, and that's his Supreme Court pick. Take a listen to what he had to say over the weekend.
You are very eminently qualified for this job. You are going to be fantastic. This should be a straightforward and prompt confirmation. Should be very easy. Good luck. It's going to be very quick. I'm sure it'll be extremely non-controversial.
Kevin, I use the president's words, extremely non-controversial, very easy. Will it be very easy?
Well, I'll keep this quick. 3 points. Politically speaking, this will likely activate both sides of both parties in terms of you have a conservative being nominated to the Supreme Court, and progressives will feel emboldened to get out to the polls, not just at the presidential level, but on down ballot races. In terms of the timetable, the confirmation hearings before the Senate Judiciary Committee, Republican-controlled Senate Judiciary Committee, are set to begin within the next week and a half. And then finally, this is an important nomination process, not just because of the political implications, but in the immediate short term. A prominent case that the Supreme Court is going to take up, scheduled to take up on November 10th, is on the Affordable Care Act. So quite literally, the Affordable Care Act, Obamacare, not just going to be on the docket on November 10th, but also on the ballot on November 3rd.
And a key feature of that debate, 24 hours away. Kevin, great to catch up, sir.
Thanks.
As always. Kevin Cerulli down in Washington, D.C., 25 minutes away from the opening bell. Equity futures up 46. Session highs, we advanced 1.4%, 24 hours out. I say it again, from that debate in Cleveland. Isaac Boltanski of Compass Point weighing in on the upcoming presidential debate and writing the following. The reality heading into Tuesday evening is no one really knows what to expect other than a disjointed affair driven by disdain, distrust and a steady stream of personal attacks. Isaac joins us for more. Isaac, the challenge for market participants tomorrow is going to be immense. Not only what to expect, but what matters, what ultimately matters in that debate tomorrow. What are you looking for, Isaac?
I think the most important thing is, how does Joe Biden do? Does he have a Rick Perry moment? As you remember, back in 2011, Rick Perry said there were 3 agencies he wanted to get rid of in the federal government, but he could only remember 2 and then said, oops. And so, look, I think that market participants are first and foremost going to be looking at how does Biden react to the president? And I think this is vitally important, because the only way that Biden can truly push back against the president's attacks regarding the former vice president's mental faculties is in person and in response to what is going to be a barrage of attacks tomorrow night.
Isaac, I'm always trying to think about this from a market's perspective and trying to understand where the bar is just in terms of expectations. Quite clearly, we have a front runner in the former Vice President Joe Biden. It's there in the polls for all to see. But when it comes for expectations, when it comes around to expectations for his delivery tomorrow, they're pretty rock bottom. And the president's helped put them there by questioning his cognitive ability. What does that mean, Isaac, for expectations going into tomorrow?
I can tell you that most of my clients read the polls. They believe in most of the polls, and their expectation going into tomorrow night is that the former vice president is clearly in the lead and should be considered the favorite. But they're not going to get that confirmation of their belief and the polls that they've read until they can actually see what the former vice president and what the current president look like head to head. And so when I talk to clients about positioning and how they should be thinking about the election, there are 3 points I make. Number one is we are still 36 days out and goodness knows what can actually happen. Point number 2 is there are 3 different debates, so we should be conscious of not everything riding on tomorrow night. And point number 3 is you have to focus squarely on the certain states that will decide this and not get caught up in the noise about national polling.
Let's dig deeper there, because I think it's important, particularly on the undecided. So I asked Kevin Cerulli this question earlier on this morning, Isaac. Who's not decided who they wanted to vote for? And I can tell you, travelling around the United States, whenever I sit around with people and have a conversation, you can gauge pretty quickly whether they like the president or don't like the president at all. Isaac, I have yet to find anyone that goes into the middle ground and can't decide who they'd vote for. Who are the undecideds? How many are there? Where are they?
This is why I think that the tax story that broke last night is It is incredible reporting and an incredible story. But I don't know how much it's going to really impact the election, because 90% plus of the electorate has already made up their minds one way or the other. Look, conceivably, this tax story can impact the 5 to 10% of the electorate who haven't made up their minds or don't want to say which way they're going. And it could conceivably weigh on voter turnout among the president's supporters. But to me, it's really not going to impact those diehards on either side who, A, some of whom are already voting because early voting is open, and B, made up their minds years ago regarding this election.
Isaac, I'll finish things with the most cliche question ever from a journalist to an analyst, which is, what does success look like tomorrow for either side?
Yeah, so what I'm telling my clients is I'm not sure that there's going to be a quote-unquote winner in this debate, but I think there's going to be a loser. And that loser is going to either be the former vice president because he has a stumble that the Trump campaign can seize on, or it's going to be President Trump because his numerous arrows that he shoots across at Biden are blocked largely because of Biden's capacity to, hopefully, for the Biden campaign, reshape the narrative and deflect some of the attacks on questions like where's Hunter and some of the rejoinders that we should expect tomorrow.
Isaac, do we know if they're at a desk or whether the president can do what he did last time, stand up and follow the former VP around the stage?
We know they're in the same room, and beyond that, I don't know what we should expect, which is my main point of this is why I think it's going to be the most important debate since Nixon v. Kennedy, because no one knows what's happening tomorrow. No one knows what the narrative is going to be the morning after. And I think that's going to be the most watched debate that we've had in a very long time.
Isaac, great to catch up. Isaac Boltanski there, ahead of that debate tomorrow. In the markets right now, at 46 on the S&P. We advanced 1.4%. Looking at the movers ahead of the opening bout from the market desk, here's Abigail.
John, this morning, the pre-market movement really dominated by the mega caps, starting out with Apple. These shares popping sharply higher, back above firmly the 50-day moving average without ever really testing the 100 or 200-day moving average, suggesting the recent volatility is very much technical in nature. Amazon popping, as Baird says, buy Amazon. It is attractive at current levels. Netflix is higher, with Jefferies raising their price target to $570 per share. And of course, Elon Musk out this morning on Twitter saying the company may make 20 million electric vehicles per year by 2030. That's 50 times the current level. That stock rebounding from last week's weakness and setting the stage perhaps for the strength that we're seeing in the pre-market today, John. Last week, Apple on the week up about 2%. Its first up week in the month of September. The mega caps are back, John.
There is a bid back in this market too. Abigail, thank you. Coming up on this programme, a judge temporarily blocking the president's ban on TikTok. That conversation coming up next with JP Morgan's Diana Amoa. From New York and London this morning, good morning. With equity futures elevated, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen.
And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's going to be totally controlled by Oracle. And then I guess they're going public and they're buying out the rest of it. They're buying out a lot. And if we find that they don't have total control, then we're not going to approve the deal.
The President of the United States on a ban on TikTok, and the ban gets a whole lot more confusing. The ban blocked by a federal judge, even as the US takes aim at another prominent Chinese technology company. A spokesman for the Chinese Foreign Ministry reacting to new export restrictions on Semiconductor Manufacturing International, saying, quote, what the US has done has violated international trade rules, undermined global industrial supply and value chains, and will inevitably hurt US national interests and its own image. The battle all over all of this continues, and trying to bring some much-needed clarity is Bloomberg's Scarlett Fu. Hey, Scarlett.
Hi, John. Yeah, let's get back to TikTok and China, because it's a short-term win here for TikTok and its Chinese parent ByteDance. On Sunday morning, a federal judge blocked indefinitely the White House's attempt to remove TikTok from different app stores and also suspend updates to the app in the U.S. The ban was supposed to go into effect at 11:59 p.m. last night. Now, one of ByteDance's main arguments is that the attempted ban was irrational, since ByteDance is currently in negotiations to sell TikTok exactly as President Trump had demanded. So this means that TikTok has more time to get approval for its proposed deal with Oracle and Walmart. Remember, President Trump giving his initial thumbs up, but CFIUS is still reviewing it and will make a final recommendation to the president. Beijing also needs to give it its approval. The Sunday ruling, of course, does not affect the November 12th deadline, which is a separate deadline for a sale of TikTok. And if there's no deal by then, the U.S. will completely shut down the app. Now, the 100 million Americans who have downloaded TikTok are probably breathing a sigh of relief here, because they can continue using the app without interruption. The app has exploded in popularity, user growth growing exponentially from 27 million in January of 2019 to more than 100 million today. And it's because of this that the White House says it's concerned that the personal data that TikTok collects on all these users could be shared with the Chinese government, and that poses a national security threat. That's the rationale for forcing a sale to majority U.S. owners. TikTok, of course, for its part, says it operates independently of the Chinese government. And you can see, of course, the players involved here, Oracle and Walmart, moving higher in the pre-market. Their proposed deal includes their taking a combined 20% stake of a new entity called TikTok Global, and together with the U.S. investors that back ByteDance, that would get us over the majority holdings owned by U.S.-related companies. John?
Scarlett, we saw this injunction with WeChat. We're seeing it again with TikTok. And I made the statement at the time that I think it's hard to act like China if you're not China. If President Xi wants to ban something, the Chinese Communist Party will just ban something. The United States can't play tit for tat, can they?
No, they're not in a position to do that. President Trump, the White House, has to deal with the court system. And, of course, ByteDance has its own recourse, which means it can go through legal channels, which is exactly what it's done here. So it's not as clean as what the Chinese government can do. But that's the difference between a democracy and a communist system. John?
Very true. Scarlett Fu on the latest. Scarlett, thank you. 14 minutes away from the opening bell. We have set up as follows in the equity market. We advanced 44 points on the S&P 500. Futures looking good, up around about 1.35%. Huge debate in the last week about where to be positioned regionally speaking. The bid into Europe, well, it faded big time last week. Should you maintain some exposure into EM? Diana Romero of JP Morgan weighing in on emerging markets and seeing potential for a double dip writing the following. We still see EM growth contingent on COVID vaccine timing. EM growth should pick up after Q1 2021. It's still a benign backdrop for EM assets with ongoing slow recovery and policy support, though with a higher hurdle for further stimulus. Diana joins us now on the phone. So, Diana, help me out here, because there's a huge debate on this in the last week or so about whether it's time to pare back exposure or start to feed on EM once again after the dip of last week. What's your take, Diana?
My take is it's time to do the latter. So it's time to actually look for opportunities within EM to increase positioning and to actually diversify portfolios. Because ultimately, John, what's going to be happening in the next 6 to 8 weeks is we'll have a lot of volatility and uncertainty coming from the U.S. So historically, the U.S. has been the place where you want to go and hide in times of uncertainty. But at a point where the U.S. is the shock, is the introduction of oil to markets, I think looking beyond for opportunities outside makes sense. And EM is a good place to be looking for those opportunities right now.
Does that mean look beyond Europe as well? When you say look beyond the United States, is it also look beyond Europe too now, given what we've seen in the last couple of weeks, Diana?
Definitely look beyond Europe. Some of the best performing currencies yet to date have been in Asia. So the Taiwan dollar comes to mind. Renminbi is another one. There is clearly a differentiation as far as the recovery and growth and the virus evolution goes that seems to be favoring emerging markets at this particular point. Now, headline risk aside, and, those are here to stay. But you look at the rebound in activity that we've seen in China, that's been pretty remarkable. Retail sales are back to pre-COVID levels. Manufacturing is back to pre-COVID levels. We're coming into Golden Week where we anticipate a pickup in tourism that will also start to push services up towards those pre-COVID levels as well. So if you worry about Northern Hemisphere coming into the winter months and potentially actually seeing a second wave or slowdown in activity, then looking for opportunities where there's a little bit more growth and policy support in EM makes sense.
Diana, it's interesting to me that several years ago, if we were talking about playing the China recovery story, we'd think about Europe and Germany as a proxy for that. What is it that's changed in Europe, in a place like Germany, that is no longer getting that pickup, that leverage from a recovering China?
I'd say the biggest change, so let's put Brexit as one thing, because that's also still ongoing, and this is going to be a key week for how that narrative plays out. But what's changed in as far as Europe's ability to benefit from a pickup in Chinese activity is actually China has become more inward focused, more domestically focused. So they're more focused on consumption, on boosting sectors that get the consumer up, on actually gearing a lot of the manufacturing towards the domestic consumer, whereas historically, the Chinese story was about exports. And that entailed a huge amount of imports from Europe as well to support the kind of exports China was doing. So this decoupling and nationalization that seemed to have started with the U.S. actually has impacted global trade and supply chains across the globe.
Diana Romo, always great to get your thoughts on a programme. Appreciate your time. It's a really interesting conversation at a pivotal point for a big trade. Diana Romo there of JP Morgan on emerging markets as Europe last week really broke down and underperformed the United States. A little bit later this morning, we'll have that conversation with Jay Pawlowski. Looking forward to that. Coming up, the analyst action you need to know. We'll do that next in our morning calls. And then after that, we will catch up with Jay of TPW on the bull case for Europe after a really ugly couple of weeks for the banks, as the banks just hit rock bottom over on the continent. We bounced back big time this morning, up around about 45 on the S&P 500, advancing 1.38%. The bigger bang for your buck does come from Europe, a bounce after an ugly sell-off last week. The DAX is up by 2.84%. The CAC 40 in Paris, France, up by about 2.18%. And the FTSE 100 a bit under that too, with HSBC rallying. We're up there by 1.68%. Your morning call's up next, right here on Bloomberg. This is Bloomberg. 4 weeks of losses on the S&P 500, a tidy bounce back this Monday morning on S&P 500 futures up 46 points. We advanced by 1.4%. More broadly in foreign exchange, what you do see today is a weaker dollar, even against dollar yen 105.43. The outperformance coming from pound sterling, cable riding high, but I've got to say cable is a tug of war between playing Brexit headline roulette and COVID restrictions. Front page of the Times of London today, all about the potential for a 2-week shutdown. Trading sterling is getting harder and harder and harder. Brexit negotiations kick off again tomorrow in the UK. And the bond market, Treasury yields, it's a snoozer, I know. Wake up, are you with me? 0.66% is your yield on a 10-year. We go absolutely nowhere. Even with risk appetite improving, you can't get higher yields. Even with risk appetite breaking down, seemingly you can't get lower ones. That's your cross-asset picture going into the opening bell this Monday morning. Let's get you some morning calls, shall we? A look at some of the analyst recommendations on Wall Street this morning. We begin with your first call from KeyBank. Upgrading UPS to overweight with a 190 price target. The analyst citing increasing e-commerce exposure and improving domestic packaging growth. That stock is positive by a little more than 2%. We're up 2.38% there. Your second call from the team at Deutsche Bank. Upgrading FedEx to a buy with a 318 price target. The analyst expecting upcoming results to exhibit strong pricing power with investors underappreciating the likely benefits. That stock riding high at 256 going into the opening bell. We are positive 1.9%. And your third and final call, it comes from the team over at Jefferies, raising its Netflix price target to 570 with a buy rating. The analyst expecting near-term price hikes to both domestic and international markets, given the company's deepening library of content. They're three of the calls on the street. That stock is up by 1.8%. Coming up next is TPW's Jay Pawlowski joining us for the opening bout to debate the US versus Europe. That conversation just around the corner. And later we'll talk about policy as well, as I think the Federal Reserve and market participants continue to look past each other and continue to talk past each other. The Fed communicating how high the bar is for an interest rate hike. The market wants to know how low the bar is to do more as credit spreads continue to widen. That's next on Bloomberg.
the Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
25 seconds away from the opening bell in New York City. Futures with a tidy bid up 46 on the S&P. We advanced 1.4% on S&P 500 futures. 15 seconds away, switch up the board. Here's your bond market. A tale of two halves for the trading week. The front half, all about the politics, the debates tomorrow. The back half, all about the data. Thursday claims, Friday payrolls, and ISM somewhere in between. Your bond market, guess what? Does nothing. 0.66% is your yield on a 10-year. In foreign exchange, dollar weaker. Last week, dollar stronger, much stronger. Euro dollar 116.70. And in the bond market, I said we didn't do much there. We're not doing much in the commodity market either. Crude, $40.20, and basically unchanged on the day. That's the cross-asset price action this Monday at the market desk with your movers. Here's Abigail.
John, let's start out with the name that is boosting each of the major averages the most, and of course that is Apple. Shares are popping sharply higher again on what appears to be technical buying. Investors liking the fact that the giant, the iPhone giant, put up its best week in more than a month last week, up about 2%. In fact, its first week in the month of September. Amazon getting a boost from Baird. Colin Sebastian saying it is very attractive at these levels. Buy the stock. Boeing, the FAA chief, is riding a 737 test flight on Wednesday. Now, this is a former Delta pilot, so a boost of confidence there for the shares of Boeing. And then JP Morgan riding that European bank financial rally, as are some of the other big banks here. Super interesting, John, is the bulls are out to such a degree this morning that despite fears around the virus, a second wave, what you're talking about in the UK, a little bit here in New York, even with clusters reemerging, we have travel stocks on the move higher. Airlines, hotels, cruise line operators, and very interesting, Virgin Galactic. This stock has been initiated on in a positive way by both Bank of America and Susquehanna. It could be, though, John, there's a super high bearish short interest on that stock, therefore popping by more than 10%.
Abigail, thank you. 90 seconds in. Abigail with the movers at a sector level. Every single sector advancing on the S&P 500. The index level, we're up 1.33%. Europe versus the United States. People lining up to say pile into Europe. They went quiet last week, big time. Severe underperformance on the continent. Is the happy talk over? Here's Bloomberg's Kelly Lyons for more. Hey, Kelly.
Hey, John. Well, I definitely don't see any potential lockdown risk reflected in the price action for European stocks this morning, staging quite a rebound on this Monday, heading for their best day for the major benchmarks in months. And this follows the worst week for those exact same benchmarks since all the way back in mid-June. And of course, as we approach the end of the month, John, these equities are heading for their worst month since March. Granted, they are still holding up relatively better in the month of September than stocks on this side of the Atlantic, the S&P 500, the relative underperformer here, but still it is a down month. And it begs the question, John, if the rally we're seeing today is a fundamental shift in sentiment or just temporary relief. I have to talk about European banks here, of course, for example, hit a record low on Friday, today up nearly 5%. Today's optimism aside, the fact that we are near all-time lows shows that this is still a sector that faces many headwinds, and you can make that argument really about Europe in general. As we're looking at here, the Stoxx 600 index basically going nowhere since June, stuck in a sideways pattern. And we know while Europe has been range-bound, the U.S. has been far from it. Wild swings in the past several months. And of course, when we talk about the Europe versus U.S. conversation, it's ultimately one about relative value. If we're looking at here, at GTV Go at that valuation gap, the spread between the forward PE ratio on the S&P 500 and then on the stock 600. That had widened dramatically in the August run-up, but has narrowed now back down to the range of spring and early summer. Of course, this is largely a tech story, John. Europe just does not have the tech exposure the U.S. does. That means Europe lags when tech is running hot. But when froth comes off the top, Europe's a little bit more insulated, John.
Kelly Lights, thank you very much on the latest between Europe and the United States. Here's the bull case from Jay Pawlowski at TBW. He writes the following. European demand has taken a step back in several countries, but with recent additional fiscal packages in Germany, France and others, the risk of a material pullback seems low. Jay joins us right now. Jay, great to catch up, sir. Last week, a tough week for your trade. Your thoughts, please.
No, certainly it was, John, and Kelly laid it out very well. But look, we've been up for months, and so when you have a little bit of a pullback, you can either take that as a sign of impending doom or take that as a sign of a healthy correction. And we've been in the camp, as you know, I think the last time we were on the show, we talked about the need for a healthy pullback, particularly in the tech-led stuff. We got that, and then we had a little bit of a swoon last week. Between stimulus questions in the U.S. and the second wave fears in Europe. We do not share the fears of a second wave throughout Europe. It's really concentrated in one or two countries, France and Spain, and then the UK as well. Mobility indicators, real-time indicators suggest the European economy continues to do well. We think if you're a believer in a synchronized global recovery that is supported by abundant global liquidity and is about to be aided by the speed of science, both in rapid testing, important for Europe, rapid testing, as well as a vaccine in the next couple of months. These are opportunities to build positions.
Well, Jay, to be fair, you did just name three of the largest five economies in Europe, Spain, the UK and France. The only ones you didn't mention, of course, Italy doing very well. Let's hope it stays that way. Germany as well. I just wonder how you think people will respond to headlines if they get worse. This was in the Times of London this morning on the front page. Ministers are preparing to enforce a total social lockdown across much of the northern of the UK and potentially London to combat a spiralling second wave of the coronavirus. A lot of speculation around that, no confirmation from the government whatsoever. But Jay, I just wonder from your perspective how you think market participants will respond to headlines like that through the winter.
Well, I think if it spreads, obviously it's going to be negative. And look, you can talk about, if you're going to talk about that, John, then you have to talk about the U.S. The U.S. has done the worst job of controlling COVID, has the inability to add to fiscal stimulus, as we've seen. And this has tremendous political dysfunction and risk building into it over the next 3 months. So part of this is a relative opportunity. We think Europe has none of that political risk. We don't think the second wave is going to build. We do think rapid testing is imminent and is on the ground in the UK and in Germany. We expect more of that. And so we think this is an opportunity to build, particularly in markets like Germany, which we favor, as well as in the banks, which we've talked about quite a bit. And I think the opportunity here is significant in the banks. And I can give you a 2-for-1, good news, bad news, if you're up for it.
I'm up for it, Jay. Go on.
Okay, so the bad news last week was pretty clear. You had the China unreliable list, which smacked HSBC. You had the concerns about money laundering and the questions over dividends. All that smashed the European banks lower. On the other side of things, you have an M&A wave taking place in Italy, in Spain, possibly in Switzerland, next cross-border. You have banks cutting branches, German banks cutting branches 20%. You have provisioning peaked. You have credit growth, 5% year over year. You have incredibly cheap banks at 0.5 times book. They're completely under-owned. So to me, again, it's all a question of balance, of upside, downside. I think the European banks here are screaming by, and I would not be surprised at all if we are able to sustain that global recovery, which Europe is a big part of. Then I believe we will see significantly higher prices in the next 6 to 12 months.
Two pieces there to pick out, the recovery and then the bank story. Let's start with the recovery, Jay. There are people, and they've been on this show this morning, Diana Amoa of JP Morgan, brilliant EM investor, turning around to us and basically saying the cleaner way to play the China recovery is China in EM, and Europe isn't a part of that story anymore, Jay. Your thoughts on that?
Yeah, it's very interesting. We like China, and we've talked about that on the show before several times. It's our biggest weighting in EM. To me, what's really interesting about that, John, is Germany. Okay? Why has Germany become so much more amenable to things like joint issuance of debt, supporting the ECB? It's because China is starting to eat market share at the highest levels of the German industrial machine. And so Germany needs to size up to compete. And that sizing up is through the European Union. So when I look at the Joint Recovery Fund, when I look at the Green Deal, when I look at the 7-year budget, when I look at Germany signing off on all these things, I get bullish about it. I don't get bearish.
Well, many people also got bullish, Jay. Euro-dollar topped out at around about 120. Peripheral yields came in. But there's a difference between repricing redenomination risk lower and repricing a cyclical recovery in Europe higher. Is there a risk of confusing the two issues, Jay?
That's laid out exactly right, John. And look, the banks, again, are a play on that, right? You've had a massive peripheral bond rally, government bond rally. Banks are the biggest owners of those bonds, and yet they're not reacting at all. That's something I didn't even mention. So yes, there is the question. Euro at 120 is probably pretty close to fair value. It doesn't have tremendous upside. Germany, taking more power within the EU, likes a weak currency. They're going to let the ECB do whatever needs to be done. So to me, that setup is very, very nice for the cyclical recovery, which then provides the upside for Europe-wide, for Germany in particular, and for the banks especially.
Jay, it's an ongoing conversation between you and I. I look forward to continuing it through the year. Jay Pawlowski there of TBW. It's good to see you, Jay. Thank you. 10 minutes into the session, equities up on the S&P 500, up by 1.35%. Earlier this morning, every single sector in the green. It is a broad-based rally with your movers. Here's Abigail.
So leading the major averages higher from a point standpoint, of course, John, are the mega-cap tech names such as Microsoft and Apple. But beneath the surface, the best mover for the S&P 500, Devon Energy, popping sharply higher on the news that the company is buying WPX Energy for about $2.6 billion. They want more Permian Basin exposure. It's a 100% stock deal. You can see that WPX is also popping. Another deal, Cleveland Cliffs is buying ArcelorMittal for about $1.4 billion. B. Riley is saying that this could really create a steel giant. Now, going away from that deal merger activity that we're seeing on this Monday, Inovio Pharmaceutical absolutely plunging on the news that they phase 2-3 vaccine trials have been put on hold by the FDA. So that stock down sharply. Big bearish short interest there. And then Uber, this might be of interest to you, John, if you're out and about there in London, I'm not sure, but up 3.7% on the news that they have gotten an 18-month London license. They passed a court test. It's sort of interesting that that's happening as there is that possible 2-week lockdown ahead for London. But those 18 months, perhaps they're hoping more people will be out and about in London, John.
Mask on, window down. I am supporting them. Abigail, thank you. I'm supporting the cabbies as well. All sides. Coming up, a busy week of Fed speak, leading up to another US payrolls report on Friday. That conversation coming up next with Wells Fargo's George Rusnak from New York and London. This is Bloomberg.
some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Fourteen minutes into the session, equities up 1.4% on the S&P, little bit of outperformance on the Nasdaq, up around about 1.5%. A broad-based rally with a sector price action. Back with us, as always, here's Abigail.
John, this is pretty interesting because the S&P 500 right now is trying to take on its 50-day moving average. If above, that would certainly be bullish. And right now, it's looking a bit cyclical. If we go into the Bloomberg terminal and take a look at what's happening sector-wise, first of all 11 sectors are higher and by more than 0.5%. So clearly the bulls are out. But up top, we have the financials. We also have the industrials. And the best sector is actually energy, up 2.1%. So again, the cyclical sector is outperforming a little bit. Now, the financials in particular may be getting a boost from what's happening over in Europe, because that, of course, is the top sector for the stock 600, up about 3%. In Europe, we also have the industrials higher, perhaps part of what the strength that we have here in the U.S., and then tech and discretionary in Europe higher as well. It seems, John, that the bulls are out right across the globe.
All around the world this Monday morning, that's for sure. Abigail, thank you very much. Abigail mentioning Europe, ECB President Christine Lagarde discussing the economy right now and the recent developments in monetary policy, looking ahead to a week full of Fed speak, not just ECB speak. Here's Bloomberg's policy correspondent, Michael McKee. Good morning, Mike.
Good morning, John. We are waiting for headlines from Christine Lagarde, who's speaking to the European Parliament. There have been reports out of the Governing Council that there's division among the top policymakers at the ECB over how much additional stimulus may be needed for the European economy. Some say there's enough there. Others say we could do more. And the ECB is in a different position than the Fed because they have TLTROs, which could be increased. They have tiering, which could be adjusted. And they've embraced negative rates, and they could cut rates even farther into negative territory. But so far, no headlines out of Christine Lagarde. We'll bring those to you when we get them. You do mention, John, a big week ahead for the Fed and for the economy. It's the first week of the month, at least once we get to Wednesday and Thursday, and we get the numbers that everybody wants to see, the jobs numbers at the end of the week. Look at tomorrow. I do have the trade balance number on tomorrow. The trade balance was one of the big issues for Donald Trump, and it has gotten wider, not narrower, in his term in office. So I put that on there for Tuesday because maybe that'll come up in the debate. And, of course, on Thursday, jobless claims, income and spending will be interesting to see. The spending numbers in particular because they include services. We haven't seen that. And I'm really interested to know where all these hundreds of millions of dollars the presidential candidates are spending on advertising show up. And then finally, Fed speak. Lots of Fed speak. Again, second week of it. We don't have Jay Powell this week. He spoke 3 times last week. But we do have the vice chairmen of the Fed, Rich Clarida and Randall Quarles, speaking on Tuesday. Neil Kashkari, who is one of the dissenters at the last meeting, speaks again on Wednesday. And, of course, 3 speeches this week from John Williams of the New York Fed. So a lot to watch for people in the markets. We're just now getting the first headlines from Christine Lagarde. Let me just pass these along to you. Nothing new here. She said this before. The prospects for the future remain uncertain. She's talking about the Eurozone economy, that the recovery remains incomplete, uncertain, and uneven, and that public health crises pose a downside risk to the outlook. As I said, all old stuff, John. And, of course, this may not make a huge difference because the next ECB meeting isn't until October 29th.
Likely to hear that on repeat in some way, shape or form until that particular day. Michael McKee, great to catch up, sir. As always, huge week ahead with a ton of Fed speak. Not sure if that's a good or a bad thing. You can decide at home. George Rosnack of Wells Fargo weighing in on the prospect of negative interest rates. He writes the following: a new unexpected shock to markets or an economy that fails to recover as expected could challenge domestic policymakers' desire to avoid negative rates. Negative rates, whether engineered by the Fed or realised by the markets, could have profound consequences. George joins us now. So, George, there were 2 elements to that there. The first was the Fed. The second was realised by the markets. And I just wonder, from your perspective, whether a more valuable conversation would be to talk about the latter, considering there's no appetite for the former. Do you think we could see that further down the curve in the Treasury market in America?
Negative rates are possible. I think you're right. From a policy perspective, the Fed has shown no appetite nor desire to go into negative rates, right? They haven't proven helpful overseas, and they've actually, unfortunately, damaged some areas, whether it's individuals, banks, or other financial institutions. From our perspective, could the market push the rates into negative territory? It's feasible. We actually have a model that actually shows that could happen at some point down the road. Again, we think that'd be more of a temporary thing, not good for the market overall, though, if that happens, John.
I think we're all trying to work out a catalyst to shake us out of this trading range in 10-year treasuries, George. Have you got one?
I don't have one that's going to shake us out anytime soon, unfortunately. Certainly, the Fed has been locked and loaded that they're going to be short for the long period of time. And I think that's an important message, actually, John, is because I think people last time around when we had sort of low rates were the idea that they could just wait for a second for rates to come up. That took 7 years. This one could take even longer, John, right? So you really have to start evaluating how do you manage a portfolio in this low interest rate environment. From our perspective, a couple things. One, like I said, don't wait for this. Don't sweep it under the carpet. Two, don't look for one magic bullet. There's not going to be one fund that solves it. But you want to take sort of an incremental and sort of a multi-pronged approach. So look at income from fixed income, look at income from equities, from real assets, from alternatives, and do a risk-adjusted weighting there. Again, in fixed income right now, we're actually like in credit. We do think there's some opportunities there for some incremental yield.
Well, George, let's talk about what those opportunities are. We had some spread widening last week. I don't want to pile on the drama and lay it on thick, 40 basis points or so. It's notable. You're adding risk in that kind of environment. Is that drawdown, that spread widening, big enough for you to come back in?
We've actually had sort of a favorable view on the high yield marketplace. I think, look, there's a lot of volatility out there, John. There's a lot of uncertainty. But whenever you have that uncertainty, right, that's when the opportunity presents itself from our perspective for a longer term view. And if you look at sort of scenario analysis on high yield overall, if you expect interest rates to back up 25 basis points and spreads to widen by 100 basis points, right, option adjusted spreads to widen by 100 basis points over the course of the year, you'll still get a 2% return in high yield. So again, that 6% yield buffer that you're getting, they're actually doing okay. If that's your downside, that's not a bad downside. Even if it goes up 200 basis points, you're only going to be down about 1% over the course of the year. So from our perspective, that's the one you want to step in, especially if your prospects are a little bit less than that. And I think the other thing with that, John, is certainly debt to EBITDA ratios are worsening. Certainly default rates are going to be picking up here. But if you look at what the companies are doing, right, they're raising a lot of cash. They're stopping CapEx. They're stopping their operating expenses. And actually their cash to asset levels have more than doubled since March. So you're looking at move from 4% to 8%. So they're controlling what they're controlling. They're trying to fortress up their balance sheets. And the last thing I would just add is they have liquidity within the marketplace. They've been able to issue debt, and there's good flows into high yield. 6 to 8 of the last weeks have been positive flows. So in that environment, collect the coupon, maybe a little bit of spread tightening, but even you're a little bit protected, as I mentioned before, if you do get a little bit of widening.
Your sector views, though, George, are interesting because when I look at your sector views in equity land, they're slightly defensive, just in terms of being long tech and being less constructive on energy. So your view in fixed income right now is not some big cyclical impulse. It's much more structural. Would that be fair, George?
It's fair, but I would say we've also taken some time recently in this volatility with the uncertainty of elections, financial stimulus, of COVID vaccination. All that uncertainty has caused a little bit of a backup in the marketplace, and we've taken a little bit more of aggressive tone in the equity markets in the sense that we move from most unfavorable on small caps to actually neutral. So we've actually increased a little bit of our risk profile, John, as this market has been so volatile recently. So you're right, there's a little bit of a difference in views, but it's actually being synced up just a little bit more recently.
George, great to catch up. Really interesting. Got to continue the conversation. You look well. Send my best to the team. George Rusnak there on the latest in fixed income and the equity market. Coming up next, the market moving events you need to be watching. What a week ahead we've got for you. Debates 24 hours away. Payrolls at the back end of the week. From London and New York this morning. Good morning. With equities higher, this is Bloomberg.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
"25 minutes into the session, here's your equity market stateside, up nicely, up 1.07%, call it 1.1 across the board here. We look good in the equity market this morning, not just in the United States, but across Europe after a really tough week last week, particularly on the continent side of things. Euro dollar bouncing back as well. Risk appetite improving this Monday, but wow, the risk events on the horizon. We've got a debate tomorrow. We've got payrolls on Friday, ton of data and a load of Fed speak in between. That's your equity market. Here's your trading diary. What you need to be watching this week at the top of the hour. The British Parliament debating further restrictions amid increasing COVID cases. President Donald Trump giving an update on COVID testing at 2 p.m. Eastern. Cleveland President Loretta Mester of the Fed speaking this afternoon. On Tuesday, it's the first presidential debate as Trump and Biden go head-to-head. ECB President Christine Lagarde speaking ahead of the EU summit on Thursday. Plus, we get US GDP and jobless claims. And finally, it's the main event on Friday. It's Payrolls Friday, just around the corner. From New York and London, that does it for me. This was the countdown to the open. You are watching Bloomberg. You'll now be watching ECB President Christine Lagarde speaking now, updating Parliament on the economy and monetary policy. Let's listen in.
At minus 0.2% in August and is expected to remain negative in the coming months, reflecting the effects of earlier declines in energy prices, a stronger euro, and a temporary reduction in the
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest-hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
That's where they are right here.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He's all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He says things of life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
The lives you touch and people that you can affect, I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on t-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty.
The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
2 traffic, 260. Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it is widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't sport support any of those views.
Even though Putin denies any wrongdoing,
U.S. election.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to USA, 24 people went for the job. 23 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统基础，这方面确实比我们早。但是玩信息玩软的，中国人的脑袋绝不比我们差。我们在座的所有人的脑袋绝不比我们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Valleywag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The US was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the US commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and US states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect the pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, it's time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven. Get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being okay, what the hell is this thing? Coming here was kind of my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did a sound check.
How was it?
It was tight. Hold a stick glass, but you been a bitch, suck a thick cock.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier, and it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
12 in the morning, pop
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
He said when you come for a trigger like me, that was dope.
It's just lit, and I think people would take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, just like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well. And one day, it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for, independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this.
It's just Taco Bell. What could possibly go wrong?
To creating something like this, the newest music video for his song Demons.
The demons told me everything, they whisper in the night. This is not a threat, I promise.
Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. Yeah, I was the third person online.
So why'd you get here so early?
Because I want to see I want to touch him.
What do you guys think of Joji?
He's
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to pop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But 88 Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store when customers touch and feel products? And we created a concept called the Connected Rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Jade.
Jade.
Oh.
So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. I have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time.
Hey, my love.
A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in the house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
He's written it out bigger on the board, thank you. Today's the first day that I've been at school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there, and if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers.
That's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came from Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとはキャラクターとしてすごくYouTube とかで検索するとたくさんの初音ミクが出てくるんですけども、元々の初音ミクのその原点は歌声を合成するソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them.
Happy birthday to me. Happy birthday to me.
To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていう存在自体がボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本だったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってきて。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在しています。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
02 traffic, 260. Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the US government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims,
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What up everyone, it's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room, they had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my god, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi Lily, where's the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers and I'll save girls with my superpowers and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rusovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rusovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. And Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did. Because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along. It's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the fifth most popular streaming OTT service. This adapt or die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Laura, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help.
Yes.
So at some point we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, etc., sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years. And I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, etc., but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
mean
means
to a layman like me?
Mean
crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the years to a place where normal people would think about taking these flying cars, that'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through what was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved, but it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership. And he was held to account, right? I mean, he's no longer the CEO of the company. And he's a board member. He's a big investor. And so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
WBOS HD2 Brookline, Boston. WNBP Newburyport. KNEW Oakland. KOSF 103.7 FM HD2 San Francisco. And Sirius XM Satellite Radio Channel 119. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube, and yeah, we wish we were outside. It is Monday, September 28th, 2020. It is a glorious fall day.
It is so nice outside.
It's gorgeous.
It really is nice. It was a nice weekend, so doesn't really feel like fall quite yet, even though it technically is. And maybe the nice weather, maybe that's why investors are a little more optimistic today. I don't know. There certainly is a different tone in the trade, to say the least.
Yeah, totally. We are seeing stocks jumping the most in 2 weeks, at least on the S&P, and jumping after 4 weeks of decline. So yeah, Jason, you are right. There is a different tone out there. So we're watching the markets. We are also turning to one of our experts on what is safe to say the most important bombshell report on the president's taxes. We've been waiting, I feel like, for years.
We have, and that obviously hit last night. Everyone has been digesting it this morning, so certainly top of mind for lots of folks. We're going to catch up with Laura Davison, sort of a tax guy. She's going to break it down for us, get beyond the politics of
tax
this
gal.
a little bit. Tax gal, exactly. Whatever, tax person.
Individual.
Tax individual, as you would say. All right, before we get to all of that and set the Business Week agenda, let's figure out what's going on with that trade. Get the numbers with Charlie Pellet. Hey,
Thank you very much. Happy Monday to you both. Looking at the Dow, the S&P, NASDAQ holding close to session highs. Do want to begin with European equities, though. The CAC 40 up in Paris, up 2.4% today. FTSE 100 in London up 1.5%. DAX in Germany up 3.2%. U.S. stocks jumping after 4 weeks of declines. European shares adding the most in 3 months in broad gains for equities. The dollar weakened. Banks, automakers, and industrial companies leading the S&P 500 index. index toward its biggest gain in 2 weeks. Here's where we stand. S&P up 56 now, a gain of 1.7%. The Dow up 500 points, up 1.8%. Nasdaq up 172, up 1.6%. Gold is up 0.9%, 18.78 the ounce, higher by $16 the ounce. And West Texas Intermediate crude up 0.4%, 40.42 a barrel. Recapping, the equities advanced. S&P up 57, up 1.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's set the Business Week agenda, understand what investors may be thinking going into this week. Gina Martin-Adams with us, Chief Equity Strategist for Bloomberg Intelligence, joining us on the phone from New Jersey. So, Gina, nice to have you with us. A little bit of a different tone. What are investors thinking about today?
Yeah, well, first, thank you for having me. It's always good to join you guys on a Monday afternoon. In terms of what investors are thinking, I think this all actually started as of Thursday's trade. We noticed in our chart book last week that some of the stocks that really got us into this mess, namely the technology, communications, consumer discretionary, some of those really high flyers over the summer, had finally reached some signals of stabilization as of Thursday's trade. So we started to see a little bit of recovery in the broad market on Friday, and I think this is a lot of follow-through of that recovery, though I think it's really notable that it's not tech that's leading, and this has been part of our strategy really since the beginning of September. Our sector scorecard suggested that we were moving into a new phase of the market where the leadership would have to rotate to the sectors where we're supposed to experience the biggest economic recovery into 2021 eventually. And that means not the tech COVID sort of safety plays, but more value, cyclical type of stocks like the industrials and materials
and energy
of the world, and even energy. So I think that what's happening is a bit of rotation, and finally you get the tech sector stabilizing, so your primary source of downdraft in stocks is stable, and that allows for the sectors that have actually been performing reasonably well, like industrials and materials, to perform and to continue to show that leadership.
Well, and I do wonder, Gina, and first of all, we love having you, so it's a great way for us to start off our week. Do you feel like you're getting more visibility at all from CEOs? Jason and I talked to a lot of CEOs, and I still feel like there's still that, we don't quite know what's going, on into 2021. But do you feel like you're starting to get a little bit more guidance, certainly when it comes to earnings and earnings growth?
Yeah, I think you're getting guidance on some things, but not on others.
Okay,
so
yeah.
I think CEOs are picking and choosing very carefully where they can provide visibility. They will. For instance, if you flash back 6 months ago, there was no visibility because companies were scrambling to such an extent that they were just working to survive, let alone thrive. And I think that the conversation is slowly shifting to how do we thrive? How do we do well in an environment where we do have a lot of people still working from home? There are still a lot of unemployed, but there is incremental improvement in the economy. How do we navigate an economy that's partially open but operating in a different way than a 2019 economy? It's certainly not the crisis mode that we were in the fall, but I do think that there is a little bit more forward-looking commentary, more focus on how to grow rather than just how to survive. Now that we've gotten past the peak of the crisis period, it's about how do we navigate this new recovery. That said, nobody has fantastic visibility into what the economy is going to look like in 2021, obviously.
Yeah.
But there are some signs of light. There are some signs of improvement. There are the CEOs that have had the experience of recovery in China and can kind of take that story of Asian recovery and place it on the Western world and say, well, where could we go from here, and what does our outlook look like in a post-COVID environment?
Yeah, it's also interesting, Gina, and I know this is a loaded word when it comes to markets, but there's almost this sense of capitulation or maybe resignation that, listen, the virus is going to be with us for some amount of time and maybe longer than we certainly thought in March or April, but we're learning to live with it in a certain way. Obviously, the next few months are going to be difficult and we don't know what to expect, but investors sort of living with it to some extent and getting and maybe understanding that the new normal is a new normal with the virus, not a new normal post-virus in some ways.
Yeah, I think that's absolutely spot on correct. And that's the change in the language, right? If you think 6 months ago it was, okay, well, this might go away soon. And then it was, okay, it's never going to go away. And now it's, well, we're going to make incremental progress to improvement, but the reality is we're not going to go back to 2019 anytime soon.
Yeah.
It's not going to just completely go away, but it also is not going to be crisis mode forever.
Right.
So I think we're trying to find that middle ground.
Right.
It's a little bit more about realism and assessing where the realistic outlook is. At the same time, there obviously is a lot of fireworks coming out of Washington. I mean, you've got everything from the Senate to what happens with the
Come on,
White
Gina.
House. It's amazing how much we are contending with in terms of just political volatility right now.
Yeah.
In the midst of this virus environment. And so I think that companies are going to have to address that in the post-election period when we know who the players are in Washington.
Right. And we don't even know when we're going to know at this point. So even that is up for speculation. All right, Gina Martin Adams, thank you so much. Great way to start the week. Chief Equity Strategist for Bloomberg Intelligence. Joining us on the phone from New Jersey. Carol.
Wow, we're just like so much going on. I know. So listen, we have a great roster of leaders coming up, CEOs, and we're going to talk about everything because there is still so much going on in the business world. People are making decisions. People are making sales of companies. So first of all, virus, one of our go-to voices, Dr. Sandro Galea. He's Dean and Professor at Boston University School of Public Health. So we get to talk to him about running a school as well as dealing with the virus.
Yeah.
He brings both of those to the party. And then
A little private equity.
Yeah.
Yeah, love this deal. KKR buying 1-800-CONTACTS. This is a CEO who was actually with us earlier in the year talking about some of the things they were doing. Well, obviously, all that he was doing and his team caught the attention of KKR, so they did a deal last week. And in the same way companies are getting bought, other companies going public. We're going to talk to the president and CEO of ChargePoint.
Yeah.
And also round out the show talking about education, the reskilling of America, Carol.
Yeah, hey, let's just quickly do the Bloomberg Business Week Bite of the Day, Jason. One number that tells us a lot. Today's number, nice and round, 18 million. BMW and two of its subsidiaries agreeing to pay a joint penalty of $18 million to the SEC. The SEC had accused BMW of inflating its own reported sales figures by having its North America dealers designate cars as sold when they were actually still on the market. I would think that's a no-no.
Yeah, don't do that. You're going to have to pay some money to do that. All right, let's get down to Washington now. Nancy Lyons is there with World National Headlines. Hey, Nancy.
Thanks, Jason. President Trump faces renewed scrutiny of his personal finances just weeks ahead of Election Day after a New York Times report raised fresh questions about his business savvy and the integrity of his accounting. The story says Trump, a billionaire, paid no income taxes in 10 of the past 15 years and only paid $750 in 2016 and in 2017. But House Speaker Nancy Pelosi tells MSNBC she's also concerned about the money he owes.
This president appears to have over $400 million in debt. To whom? Different countries? What is the leverage they have? So for me, this is a national security question.
Trump has repeatedly refused to release his taxes, saying he is under audit. Democrats are bracing for a fight in the confirmation of Supreme Court nominee Amy Coney Barrett. They're focusing on what they see as a winning election issue, the future of Obamacare. Bloomberg's chief Washington correspondent Kevin Cirilli explains.
A prominent case that the Supreme Court is going to take up, scheduled to take up on November 10th, is on the Affordable Care Act. So quite literally, the Affordable Care Act, Obamacare, not just going to be on the docket on November 10th, but also on the ballot on November 3rd.
The Republican timetable would install Coney Barrett on the court before the November 3rd election. The official death toll from COVID-19 is nearing 1 million worldwide. Inovio Pharmaceuticals, based in Pennsylvania, says it will delay the next stage of testing of its vaccine, which uses DNA technology. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you. This is a story that broke over the weekend. I think it caught both of our attention because back to school is inextricably tied to back to office and back to an economy, even if it is some sort of new normal. New York City principals, they are not really, shall we say, endorsing Mayor Bill de Blasio.
No, what they say is there's a vote of no confidence in the city's education leadership, including the mayor and also the school's chancellor of New York City. And so they're saying that they should have to cede authority to the state to run the system of 1.1 million students. It's the largest in the nation. And, we've been covering it, Jason. It's not been very clear about how do you reopen the schools? How do you keep the students safe? How do you keep all the teachers and the administration safe? And it's really been kind of a start and stop process.
It has. And listen, out here in the suburbs, we are, trying it. We're in the second week of hybrid in our district and seeing how that goes. I hear from other folks, around the state, even around the county and around the tri-state area. Everybody's kind of trying something different. It feels like, obviously there are only so many ways you can do it. But, New York City is so critical to the economy of the region that there's a lot of pressure to get it right.
Yeah, exactly. Absolutely, Jason. And because you don't want to just kind of bring kids back and then it doesn't work. And then, for parents who maybe started to go back to work and now they have to come back home and take care of the kids. So, yeah, you need them to get it right. I do feel like you're right. As you look around the country, whether it's colleges, universities, there are some places and lower grade schools, some places that are getting it right. And then some that are really struggling. We had a little music there, huh?
Yeah, just so. Did you want to dance it out a little bit?
Was that to kind of go along with it?
Yeah, exactly. Just go along with what we're gonna do with the school system here in New York City.
I bet your kids say, "Don't sing that."
Don't sing. Don't sing. Don't.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ best level of the day, S&P and Dow close to it. S&P jumping the most in 2 weeks. Banks are advancing. S&P up now by 60 points, close to the best level, up 1.8%. The Dow is up 525 points, up 1.9%. NASDAQ up 186, up 1.7%. NASDAQ 100 index up by 1.7%. Stocks are jumping after 4 weeks of declines. European shares adding the most in 3 months in broad gains for equities. 10-year yield 0.66%. Gold is up 0.9%, 18.79 the ounce. And West Texas Intermediate crude up 0.7%, $40.53 a barrel. Recapping, S&P up 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie, thank you so much. Well, global COVID-19 cases topping 33 million as infections in India reach the 6 million mark. The official death toll nearing 1 million worldwide, though experts say the real tally may be almost double that. Let's get back to someone, he has been one of our go-to voices during the COVID-19 pandemic. Dr. Sandro Galea is back with us, Dean and Professor at Boston University School of Public Health, author of Pained, Uncomfortable Conversations about the Public's Health, and he joins us once again on the phone from Boston. Dr. Galea, so nice to have you back with Jason and myself. How are you? How's the school? Tell us how things are going.
Hi, Carol. Hi, Jason. Thank you for having me again. It has been a challenging month. I think it's a challenging month for everybody who is part of an institution that is trying to balance the risks of the moment. We as a university have been reopening cautiously, carefully, with a lot of testing, a lot of contact tracing, a lot of isolation as needed, and really working hard to keep the community safe while also working on our mission and continuing teaching and continuing our research. It's a tough balance. I think it's a tough balance for everybody, and it's part of, I think, a broader societal place where we are at, where we are recognizing that we are living with COVID for some time now, and we cannot afford to keep our world slow down because there are important things that we have to do.
And so give us a sense of that balance, Dr. Galea. Like, what is something where you feel like you've found it in terms of either staffing or class size or doing labs? Like, give us an example of where you feel like, okay, well, this feels about as good as we can get.
Well, Jason, I think I don't think I feel confident telling you anything is as good as it can be. I think everything is a work in progress. But let's talk a little bit about what we're doing. So we, as a university, are testing people extensively. We have about 5,000 to 6,000 tests a day happening. So students are tested multiple times a week. We have a lot of people who are involved both in the testing, but then also somebody tests positive and the contact tracing to see who they've been in contact with, right? So the idea is, and we had discussed this before in our previous conversations, the idea with testing is that you catch a case early so that it does not become a cluster that does not then continue the epidemic. So you find a case, you do contact tracing, you find the people around that case, you quarantine those people, and you isolate the case. And, of course, all of that is superimposed over a very strict regimen of building hygiene, and by that I mean ventilation in the building, wiping down surfaces, a very strong public campaign for people to remain safe, wearing masks, making sure that people are not in if they're sick, and every day doing symptom screens for everybody. So it really is a fairly comprehensive effort, and it is, in some respects, I think the challenge is that it's a comprehensive effort that has to happen now and has to keep happening really for weeks and months until there is a definitive vaccine for COVID.
Talk to me about contact tracing, because I feel like we are getting very mixed results, mixed reviews in terms of people essentially saying, yep, not going to cooperate. It's voluntary. I'm not going to tell you. Either I don't want to get in trouble because I was at a party, or I feel like it's an invasion of my privacy. How do you manage that?
Well, in some respects, I think it's easier to manage that within a closed system of one institution versus in the general population, right? So in our system, we have been very clear that this is part of the cost of citizenship. If you're going to be part of the community, you have a responsibility to work towards keeping others safe. And part of that responsibility is, if you test positive, is that you talk to the contact tracers and you tell them who you've been in contact with so that they can reach out to those people and make sure we keep them safe as well. It's harder to do that in the general population. There's been a lot of reports about 50% of people in the general population answer and talk to contact tracers. That's in the general population, where I think there isn't as much of a sense of shared responsibility for one another. There should be. I'm just reflecting on probably what's going on out there.
Yeah, no, that's a big part of it. I mean, Jason, you and I have talked about it. I know when my daughter got together with some classmates at the end of the summer, and we had kind of quarantined her for months, you know, we as families went into it saying, okay, what have you been doing? Who's getting tested? You know, like, there was this sense of community to make sure everybody stayed safe. And I feel like, you know, not everybody's on the same page with that. Also, to be fair, and Dr. Galea, you understand this, not everybody can be on the same page. There are some people that, you know, if they don't go to work, they don't get paid, and they're in a tougher predicament. And I just, you know, Well,
I think, I mean, this is why, Carol, I think the reopening is so important. I think it's, you know, the data are very clear, for example, that your chances of being able to work from home are much higher if you're in the top 25% quartile of income. So people who have to go to work are people who are already making less income. We know that overlaps with race, right? We know that the disproportionate burden of COVID in many respects was because we exposed people with low income, people of color often, to work before we understood how COVID works. But the economic shutdown, I feel like the public conversation about the economic slowdown hasn't been fair, because to be frank, it's been directed by people whose livelihoods are not really at risk from economic slowdown because they can work from home. But the fact is, more than half the population cannot work from home. Right. So if we take the premise that, well, we should reduce the risk of COVID at all costs, well, do we really mean at all costs, or do we mean at all costs to somebody else?
Right.
And I think we need to be honest with that. And economic slowdowns hurt people who are already at the low end of making income, and that is something that we as a society have a responsibility to try to avoid as much as possible.
All right. You have hit on a very important point that we're going to pick up on when we come back. We're going to do some news and come back on the other side with Dr. Sandro Galea. He is Dean of Boston University's School of Public Health. He's also, as you might have gleaned from what he was just talking about, very, very well-versed on issues of public health and inequality. He's got a great book called Pained Uncomfortable Conversations about the public's health, and he deals with a lot of these issues that he was just alluding to. So we're going to get into that and more on the other side of this, Carol.
And these issues, I hope we don't stop talking about them once we get through this and the vaccine, because these are important. There's deeper problems in our society. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to continue our conversation with Dr. Sandro Galea up at BU's School of Public Health. Interested to talk to him about what's next, especially what we need to be thinking about as we've been talking about, sort of settle into this new world where we're living with the virus. How do we not lose focus, as you said, on these issues of inequality?
Yeah, exactly. It would be nice to move the needle forward on a lot of things. All right, we'll get back to that in just a moment. Let's get back, though, to your top business stories. Check in once again with Charlie Bellett.
All right, I thank you very much. Sudden move higher for Uber Technologies. This headline from the Bloomberg Professional Service. Uber said to be weighing the purchase of BMW Daimler's ride-hailing venture. Uber shares jumping higher now, up by 4.1%. Crosstown rival in San Francisco lift up by 2%. The Dow, the S&P, and NASDAQ all jumping close to session highs right now after 4 weeks of declines. European shares added the most in 3 weeks in broad gains for equities. Signs that politicians are moving toward new fiscal stimulus has been a boon to stocks in recent days as the Fed continues to provide liquidity. Here's where we stand. The Dow up 511 points after 4 weeks of losses, up now by 1.9%. The S&P up 59, up 1.8%. NASDAQ's up 182, up 1.7%. 10-year yield 0.66%. Gold is up 1% today, up $18 the ounce at $18.79. And West Texas Intermediate crude up 1.1%, $40.68 a barrel. A Guggenheim analyst says results from Johnson & Johnson's inoculation against COVID-19 disappointed when comparing immune responses to those from patients who had recovered from the disease. Johnson & Johnson shares, they're up, though, by 1.7%. Some of the other stories that we're following: Inovio Pharmaceuticals has put a partial hold on a phase 2 and 3 study of its COVID-19 vaccine after American regulators raised questions about a delivery device that's used in the inoculation. Shares of Inovio plunging today by 28.6%. Flu season is upon us, raising questions about what sort of a season it's going to be given the backdrop of the coronavirus pandemic. Dr. Joshua Sharfstein is Vice Dean at the Bloomberg Johns Hopkins School of Public Health. He was interviewed this morning on Bloomberg Television.
There's some years where the flu, fills up the hospitals by itself, and then on top of that, you would have a pandemic. So that's a really scary scenario. I think it's less likely if people wear masks and keep their distance, because the same things that keep people from getting COVID also keep people from getting flu. And in the countries in the southern hemisphere where people are taking a lot of precautions, they've had very mild flu seasons in their winter.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Recapping the Dow, the S&P, NASDAQ 100 index at or near session highs. S&P up 59, up 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's get back to our conversation with Dr. Sandro Galea, Dean of the Boston University School of Public Health, also the author of the book Pained, Uncomfortable Conversations about the Public's Health. So let's talk about the public's health, Dr. Galea. What can we be doing before we get to the other side of this? What should we be doing to ensure that we don't lose sight of these inequalities that have been laid bare by this pandemic?
Well, Jason, I think what the pandemic has shown us, and I like your use of the term laid bare, it has shown us the inequalities that existed already before the pandemic. The country is really shaped by deep socioeconomic inequalities and deep racial inequalities. And those inequalities have health analogs. Just like we have haves and have-nots, we have health haves and have-nots around those two axes. Now, the pandemic revealed that. We have black Americans have 2.5 times greater risk of dying during COVID than white Americans. And that is largely due to the double whammy of, one, greater burden of disease that black Americans had compared to white Americans, and number two, that a disproportionate number of them work in what we came to call sort of essential work, frontline work that exposed them to getting COVID. So to my mind, what COVID is now letting us see what was already there for us to see had we looked for it. So the question you ask is, how do we not forget this? And I think we do not forget this, frankly, by continuing to have the conversation and saying to ourselves, the time to fix these inequities by socioeconomic class, by race, is not when we're under duress from a pandemic. It's when the pandemic is over, before the next pandemic. So I really think that there's going to be, and there should be, a reckoning with what are the forces in our society, the economic forces, the social forces that we need to realign once the pandemic's over. You know, the metaphor that keeps running through my mind is you're on a ship going through a storm, right? And you're on a ship going through a storm, and the ship is not doing well because it's leaking or because the sailors don't know what they're doing. Well, while you're going through the storm, the best you can do is try to patch up the prow and get your sailors to do something that's not too terrible. But really, the time when you should be fixing the ship is when you're past the storm. So you should be getting the ship ready to face the next storm. And we as a country have ignored this for decades. So it is, I mean, if one were to be silver lining inclined, this could be a good time for reflection for us once we get past this pandemic and say, what are the structures we want to build to make the country healthier and ready for the next time?
Well, what would be the structures you would build?
Well, I think the big mistake, Carol, that we've been making is we conflate healthcare with health. We spend more on healthcare than any other country in the world by a lot, by about 40% more than any other country in the world. And yet, compared to other high-income countries, which is really the only fair comparison, we have the worst health indicators compared to, you know, we have lower life expectancy, we have higher heart disease, we have higher cancer mortality rates. Now, why is that? The reason that is very simple. It's because all our money goes into high-tech medicine that's there to cure us when we're already sick. What we need to do is we need to prevent disease before it starts. And the way to do that is by having livable wages, safe housing, availability of nutritious food, gender equity, less violence. And unless we invest in those forces, we are going to keep pumping money into healthcare, and our health is still going to lag behind. So that's at a fundamental level. It requires understanding what produces health and investing in what produces health, not just investing in healthcare.
Yeah, that's a really interesting point.
So important.
I like that. Dr. Sandro Galea, thank you so much. Really nice to have you back with us. We look forward to next time for sure. Dean of Boston University School of Public Health, also the author of Pained, Uncomfortable Conversations about the Public's Health. And it's such an important point, Carol.
Yeah.
And I had never really heard it distilled down like that. We separate healthcare from health. We think about it when we talk about it from an investment perspective. Well, it's the healthcare industry. But all of those things that he talked about, and education, I feel like there's a pretty clear path to, but nutrition, I feel like sometimes food we separate from health.
Oh, we totally do. But I thought what he said about livable wages, safe housing, you wouldn't necessarily correlate that, right, with better health either.
Yeah.
But it's all intertwined.
Yeah.
You need all those steps.
Totally.
That whole last thing, how he tied it up, I thought was just brilliant.
Yeah.
That's a T-shirt all on its own.
You go.
That's like a jogging suit. Plus socks and sneaks, I'm just going to say.
Courtesy of Dr. Sandro Galea.
Our really
thanks to him. Coming up, we're going to dig into the magazine a bit. But before we do that, let's get to Nancy Lionstown in D.C. Hey, Nancy.
Hey, Jason. President Trump apparently paid no U.S. income taxes for years because his hotels and golf courses were losing substantial sums of money. That's according to the New York Times. Bloomberg's Irv Chapman reports one Republican congressman is coming to Trump's defense.
Voters knew about Donald Trump's business successes and failures in 2016, and they'll support him again, Republican Congressman Michael Waltz said in a Bloomberg interview.
Those are the tax laws as they're structured. If we need to restructure the laws, we can have a debate about whether there are loopholes that need to be closed. We have a tax structure that allows for growth, that allows for prosperity. The president followed the law as it's currently structured.
Waltz said 1,000 people a day are moving to his state of Florida to avoid paying high taxes in other states. In Washington, Irv Chapman, Bloomberg Radio.
The winds are back in Northern California, and that means wildfires are back as well. A blaze in the wine country north of San Francisco more than quadrupled in size overnight to 11,000 acres, ripping through a region devastated by fires just 3 years ago. Jan Zakin says she quickly left her home due to the flames.
We woke up in the middle of the night, and there were flames. We could see flames, and we ran to the car, and I was in my underwear. I still haven't found my dog, and we left with nothing.
The U.S. Storm Prediction Center says more than 36,000 square miles in California, an area larger than the entire state of Indiana, is under threat from critical fire conditions affecting nearly 6 million people. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. It's funny that we're going to talk about this SarahHalzack. First of all, I love Sarah Halzack, love her stuff. I was just talking about resisting the Death Star-like magnetic pull of Amazon today.
Oh, because of Prime Day? Or because of what?
Just in general. There are a couple books I want to buy, and so I went to the effort to order them from my local bookstore because I do feel like I fall too easily into just get it on Amazon.
It's a dangerous thing.
Right?
I think it's a dangerous thing. And I think you end up buying things you don't need.
Yeah.
Or that you, I don't know.
That you can get, I love to support small businesses, and I love this local bookstore, Village Bookstore in Pleasantville, shout out.
Yeah.
Love getting my books from there, but I'm going to get it faster if I go to, especially if I've got to order, if they've got to order it for me, I'm going to get it faster if I order it from Amazon, and cheaper.
Amazon kind of knew what they were doing, right? When they created the whole shipping thing and getting it so quickly.
But the Prime Day thing is huge because it was supposed to happen in July. Now it's happening in October. And so that's bad news for big retailers, too.
Right, exactly. Well, if you think about it, the seasons are all screwed up right now between back to school and holidays, and everybody's trying to kind of, juice their sales, if you will, because nobody's going to stores or not at the same volume that we have seen before. And so if Amazon kind of moves around its date, what's the impact, right, on some of these big box stores?
Exactly. Well, and you also have a situation where owing to shipping and online, you've got big retailers moving back. Some of their sales are moving up, I should say, some of their sales for the holidays because, to your point, they got to make up for some back-to-school sales that they didn't get. And then just the lack of sales they're getting because malls aren't open and there's no foot traffic. And so they're not just getting it. So Amazon, once again,
so you didn't buy the books. No, go to your local bookstore. I'm big on the bookstores.
I ordered them from the local bookstore.
Yeah, that's a really good thing. I agree with you, especially those local bookstores.
Did you watch Away?
I didn't yet. We'll talk about it later. I know. I'm going to get there.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellett. The Dow, the S&P, and NASDAQ at or near session highs. Stocks are jumping after 4 weeks of declines, and European shares added the most in 3 months. Broad gains for equities this Monday. Banks leading the S&P 500 index toward its biggest gain in 2 weeks. S&P up now by 62 points. That's a gain of 1.9%. The Dow's up 530 points, up by 2%. And NASDAQ is up 192, up by 1.8%. 10-year yield 0.66%. Gold up 1.1%, higher by $21 the ounce at $18.82. And West Texas Intermediate crude up 1.1%, now $40.71 a barrel. Recapping stocks higher. S&P up 60, up 1.8%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, I'm really excited to talk about this next story because it's just in such the Bloomberg wheelhouse and so appropriate for a time when we're talking so much about
it could be a Netflix series too.
And how it's managed. I know, it's so great. Neil Weinberg, one of our favorite reporters here, a senior projects and investigations reporter for Bloomberg, joining us on the phone from New York, along with Joel Weber, the editor of Bloomberg Business Week. He joins us from Massachusetts. And Joel, I feel like this is also one of these stories that's so in the Joel Weber wheelhouse too, because you were the editor of Bloomberg Markets before you became the editor of Bloomberg Business Week, so you understand all the intricacies of this world. Set this up for us.
It's funny. It actually makes me remember a very similar story that Neil did for me once upon a time that actually goes to some similar places. And this is a story that Neil spent a lot of time on, and it's a really interesting one because it involves rich people and their bankers. And if that doesn't get your attention, I don't know what does.
Especially Neil, here in September 2020, right?
Yeah, exactly. So Neil, let's talk about this because it's not a story that goes particularly well for the rich guy, or at least it hasn't so far. What are we talking about?
No, I guess the sort of conceit of the story is the idea that when you're talking about private banking, the banking for the super rich, you're talking about a service that you don't get walking into your local branch office. And this goes obviously to things like investing and putting your money in savings accounts, but it also goes to things that can include outside investments or sports tickets or dinner reservations or private planes or you name it. And they'll arrange it for you. And the question in the story is, at what point does it stop becoming banking and become something else? At what point are the clients lulled into sort of a sense of comfort with their bankers where they're not exactly trusting but verifying?
Yeah.
Who are the characters that you're talking about here, Neil?
In this case, we're talking about a extremely wealthy young Mexican gentleman named Moises Cosío Espinosa. He inherited a lot of money at a very young age when he was in his teens. Among his holdings is a building 59 stories on the corner of 5th Avenue and 42nd Street across from the New York Public Library, to name one. So he had a lot of money at a very young age, and he was introduced to a pretty young banker, a banker who at the time was in his 20s, and they struck up a relationship which, from our reporting, indicates that it was professional, it was also social, and it sort of the story gets into the dark corners of, what is trust and what is appropriate in banking and beyond.
Well, and I also feel like, Neil, that it raises questions like, are these relationships usually mutually beneficial? I mean, there's fees that the banker gets for doing transactions and so on and so forth. But I do wonder, there's a balance, right? And I feel like this story gets to, did the bankers go, over the line in terms of what they did?
Absolutely, and obviously you're always going to have a tension in a sales environment, whether you're selling cars or computers or banking services, where the more revenue you generate for your employer probably means you'll get paid more too, which was the case here. And on the other hand, obviously, it's a good deal for a client to get a good deal. So you have to sort of strike a balance. And in this case, after many years where the banker and the client were working together, the client came to the conclusion that, no, he wasn't getting good service. He was getting ripped off.
Neil, another element that kind of stands out here is that the banker in question, who obviously has disputed the allegations, wasn't like he stuck at one bank, right? He actually moved around and brought the client with him. Talk to us about that element.
Exactly. This was a banker who started in his 20s after he had skied in the Olympics, of all things, a fellow Mexican. He joined Citibank. He then moved for a larger pay package to Credit Suisse and ultimately ended up at Morgan Stanley in Miami, where he was part of the Latin American practice. The client, Moises Cosillo, followed him from one bank to the next, set up a family office along the way, and he hired to run his family office another banker who was very familiar to both the banker and the client, which raised questions about conflicts of interest and whether the relationship was too cozy for comfort, or at least too cozy to work appropriately.
Well, so I wonder if the problems are because the investments didn't pay off and that's why we had lawsuits, because I feel like these cozy relationships maybe would be okay if everything went along fine. Is it a case that things didn't go so well and that's why we have lawsuits? I mean, I guess this is what we're trying to figure out.
Well, it's important to say in this case it's a hotly disputed legal dispute at this point, but what the client is alleging in a lawsuit and in a private arbitration before FINRA is that the bankers, he says, stepped way over the line and they were doing transactions inside the bank. In this case, the bank he is pointing a finger at is Credit Suisse, and he is saying that the bankers were doing transactions purely to profit themselves and their employer. In addition, he's alleging that they encouraged him to get involved in outside investments, sort of private equity or private placement type of deals, where they say there was a lot of he says there was a lot of self-dealing going on. The bankers, the one who was inside the bank and the one who was running the family office, have vehemently denied the allegations.
Yeah, it's interesting. I mean, you talk about in this story where, you know, the lines blur in part because these are not always traditional straight-ahead investments. And so it's hard, especially if you're not well-versed in this area, to even know sort of what's cool and what is not cool.
Exactly. And the other question is, at what point should a client who is in control at a young age of tens or hundreds of millions of dollars or potentially more, how much attention should they pay? Should they have advisors to keep an eye on their advisors? In this case, exactly what happened depends on which side you ask, but clearly the relationship went way off the rails.
Yeah.
Well, not surprisingly, it is one of the most read stories on the Bloomberg and will continue to be. I have to imagine a lot of our wealthier and maybe not so wealthy customers are sending this to the banker being like, hey, can we call tomorrow? Can we check in? Can we check in? Yeah. All right, Neil Weinberg, terrific piece of reporting. Thank you so much. Senior Projects and Investigations Reporter for Bloomberg. Check that story out online and on the Bloomberg. Our thanks as well to Joel Weber, Carol.
It's like, whew. You got to read it too, because there's just
some great details.
Exactly.
Mexican restaurant.
And just the way it starts, it's just wonderful. All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. And coming up next, one of our favorite segments every week is when we check in with Bloomberg New Economy Editorial Director Andy Brown, who talks about two titanic forces over in China. I love this story, so we'll get into that in Bloomberg Economics. That's coming up in just a moment on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Monday, September 28th. We've got a rally underway. S&P up the most in 2 weeks. Banks are advancing. Stocks are jumping after 4 weeks of declines. European shares added the most in 3 months in broad gains for equities. Here are the numbers. S&P up 60 now. That is a gain of 1.8%. The Dow up 504, up 1.9%. NASDAQ up 195, up 1.8% again as we begin the final hour on this Monday. The Dow, the S&P, NASDAQ 100 index, all at or near session highs. Dow Transport's up now by 1.9%. 10-year yield 0.65%, down 1/32. Gold is up 1.1%, $18.81 the ounce. And West Texas Intermediate crude up 1.1%, $40.71 a barrel. Wall Street is looking ahead to Friday's jobs report. Complete coverage here on Bloomberg Radio. As for the pace of the U.S. economic recovery, Julia Coronado is the president and founder of Macro Policy Perspectives.
We've got a wave of small businesses, restaurants, retail. We've got the airlines. A lot of businesses where the support is running out and the recovery is still stalled for them. And so we could see another wave of layoffs, or at a minimum the end of the rehiring that we've enjoyed through the summer, and that could really slow progress down.
Diageo says it expects business in July to December to improve versus the first 6 months of the year as bars and restaurants reopen following coronavirus lockdowns. Diageo shares, they're rallying today by 6.2%. The parent company, their brands, including Guinness, Johnnie Walker, Tanqueray Gin, and Smirnoff Vodka. Devon Energy acquiring WPX Energy in a $2.56 billion all-stock deal, creating one of the largest independent American shale producers and answering investor calls for consolidation at a time of crisis for the industry. Shares of both companies are surging. Devon up 13.3%, WPX up by 18%. S&P up 59. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little Business Week economics now. Our pal Andy Brown is back with us, editorial director for Bloomberg New Economy. He joins us on the phone from New Hampshire. So I am really into this recent column that you wrote, Andy, because it really brings to the fore something that I think is, dare I say, sort of hiding in plain sight when it comes to China, which is around climate change. Tell us what you took on.
Yeah, so the central point is that when it comes to climate change, China is at war with itself. On the one hand, it's a global superpower when it comes to renewable energy, batteries, solar, wind. On the other hand, it mines and burns half the world's coal, and right now it has in its development pipeline power stations with either approved or about to get the green light with a capacity equal to the entire installed coal capacity of the European Union. So, it in a sense, it hardly matters what the rest of the world does because China is going to swamp all of those efforts. And this is why Xi Jinping's announcement last week that China is to go carbon neutral by 2060, why it is potentially so important.
Well, and I wonder, Andy, I love what you wrote, this whole idea of two titanic forces, one clean, one dirty, that are at constant war in China's fractious domestic economy. Like it or not, they still use so much coal and have to, right? As being, kind of the manufacturer to the world, they've got a lot to power. They need it to keep their economy growing. But at the same time, China is increasingly, I feel like, stepping into a void that the U.S. has stepped out of when it comes to, hey, world, let's all work together to protect the climate.
Exactly. So coal is shrinking in the rest of the world, and it's rising dramatically in China, particularly now that China wants to jumpstart its economy from the COVID lockdowns. It's fire up fire up the boilers. But here's the thing: China doesn't actually need all the capacity it's building. These power plants that it's cranking out add to a fleet that is in massive overcapacity, about 50%. So what's happening is that China is exporting its surplus capacity to countries along its Belt and Road infrastructure mega project, including Turkey, places like Pakistan, Indonesia. And worse than that, the technology that is exporting is its most basic, most polluting, dirtiest technology.
So, Andy, you mentioned President Xi Jinping earlier in the conversation. What is his role in all of this? Because more so, it feels like, than any world leader, he has not just a massive economy that he's responsible for, but he has control of that economy in a way that few world leaders do.
Well, that is somewhat true. But I mean, even Xi Jinping is subject to forces that are beyond his control, and this is sort of both positive and negative. So if you think about why is China cranking out all these power plants? Well, provincial governments need growth.
Right.
And the easiest way they find to promote growth is by manufacturing, coal gear. On the other hand, he's under huge domestic pressure to do something about the environment. So the legitimacy of his party state derives, and has done for the past 40 years, from rapid economic growth. Increasingly, people in China are saying, we want you to prioritize clean air, clean water. So that's on the sort of the public opinion side. There's also, in a more positive vein, this idea that China could actually use renewable or green technologies to become a world economic leader, industrial leader. We've already talked about batteries and coal and so on. There are all these carbon capture and storage technologies that have yet to be developed. China could actually become the leader in these technologies of the future. So there is big incentive. On the negative side, and this is very important to him, China suffers massive drought in the north. It has floods in the south. The Yangtze River has been swelling. This, putting huge pressure on the Three Gorges Dam. Huge parts of coastal China's manufacturing could disappear if you get rising sea levels. So it does have a great incentive to tackle climate.
So will it?
This is the question. So a lot of people say, well, easy to say, right? Climate neutral by 2060, 40 years away. That's long after Xi Jinping himself will have gone to meet Marx, as they say.
Yeah.
So people say, well, talk is cheap. We will, however, find out whether there is some substance to what he said by looking at the details in the next 5-year plan, right, 2001 to 2025. Those will be coming out in the next few months, probably early next year. So we'll see. It's. I don't think we shouldn't take this at face value, but nor, I think, should we be too skeptical.
Right. All right. Well, it's very smart, as always. Great context for us to consider. Andy Brown, editorial director for Bloomberg New Economy. Check out his latest column. China has a big climate change paradox. Just massive numbers, massive influence, but the scale of both the opportunity but also the challenge,
right.
He really laid them out nicely there.
But I do feel like anytime we talk to anybody in the alternative energy space or the EV space, they bring up China as being able, that's a huge market and they're way ahead in many ways. We do want to mention a headline crossing. The Trump administration considering fresh sanctions to sever Iran's economy from the outside world, except in limited circumstances, by targeting more than a dozen banks and labeling the entire financial sector off limits. This is according to 3 people familiar with the matter. Our team out of D.C. Reporting this. So again, watching, continued tensions, obviously.
Yeah, interesting. The framing is very political. Trump officials see sanctions as limiting Biden on Iran policy. It's been championed by Senators Cruz and Cotton. So we will continue to track that foreign policy. I believe it's going to be on the table tomorrow at the debate. This is Bloomberg.
All right, let's get back to World and National News headlines. For that, we turn things over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The nation's top infectious disease expert, Dr. Anthony Fauci, says the U.S. is not in a good place with the spread of coronavirus. The U.S. already surpassing 200,000 deaths as we approach 1 million deaths worldwide. He says as more businesses open up, people should continue to maintain social distance and avoid large crowds or risk new clusters of cases.
When you have an increase in cases, what we're seeing mostly among young people, but then they spread it to people who are older and more vulnerable, and that's when you start to see increases in hospitalizations.
The CDC is warning tens of thousands more Americans could die as the weather gets colder. Democratic presidential nominee Joe Biden continues to hold a lead in national polls and polls in key states. Bloomberg's Amy Morris has more from Washington.
The Washington Post ABC News poll shows Biden with a 10-point advantage over President Trump. A poll by the New York Times and Siena College says Biden's lead is 8 points. Among state polls released on Sunday, CBS News shows Biden up by 2 points in North Carolina and President Trump over Biden by 1 point in Georgia. An NBC News Marist poll shows likely voters in Michigan favor Biden over President Trump by 8 points. And in Wisconsin, Biden has a 10-point edge. In Washington, I'm Amy Morris, Bloomberg Radio.
We're just a day from the first presidential debate. President Trump will go up against Joe Biden, and the incumbent is getting some big-name help during his debate prep. Trump confirms former New Jersey Governor Chris Christie and former New York City Mayor Rudy Giuliani are playing Biden in rehearsals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy, thanks so much. You are listening to Bloomberg Business.
Can you just see that, like the rehearsals, and there's like Chris Christie and Rudy Giuliani, and they're Biden, and then.
Do you think they try and do like Biden impressions?
Yeah, totally.
Yeah.
Like wouldn't you if you were doing that with like somebody?
Totally. Did you hear who is going to be playing Biden on the season opener and probably for the season of SNL?
No.
Jim Carrey.
Oh.
Interesting, right?
Yeah, gotta feel that. I don't
Yeah.
know.
Yeah.
Have they shot? They haven't sent anything out yet, huh?
No.
Little teaser.
I believe the season
I cannot
opener is
wait for
a week
SNL.
from Saturday.
I cannot
a week
wait
from
for
Saturday, I think. So they will have
Jim Carrey.
the first two debates under their belt. They'll have both the
The bottom line is the American people have come to
vice presidential debate.
That was a little tease, perhaps.
Was that a little?
I don't know
Jim
what that
Carrey?
was.
Was that Jim Carrey calling in?
I
Hey
don't know.
guys.
Hey,
Hey guys,
I'm
you want me to do a little
working on
Biden
it.
impression?
Yeah.
No, I don't think it was. In any case, the most read story on the Bloomberg today, this feels a little bit cinematic too. Inside the JP Morgan trading desk, the U.S. called a crime ring. Did you read this?
I kind of went through it quickly, but I have been following. This is crazy stuff, right?
It's Tom Schoenberg, and he's writing about basically the metals, the metals desk, really.
Right.
Global trading desk at JP Morgan. It's run by the top metals trader, Mike Nowak. He sets up this whole story. I'll just read the lead. Billionaires have Davos. For filmmakers, there's Sundance. For the people who mine and trade and ship everything from iron ore to platinum, there's London Metal Exchange Week. Woohoo! It's a blur of symposium. I put in the woohoo.
Yeah, I know.
It's a blur of symposium and drinks with a reliably lavish lunch thrown by JP Morgan.
Can I just say, okay, if you're wondering if it was not a good thing that they were involved doing this, the bank is expected to pay around $1 billion to settle with the U.S. Justice and U.S. Commodity Futures Trading Commission. I mean, that's kind of like, this is huge.
This is the spoofing case that we talked about last week.
We talked about it last week, yeah.
We did, but this is a deep dive into that desk. Check it out.
We'll put it out on Twitter.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell with the Dow, the S&P, and NASDAQ all pushing higher off session highs, but green on the screen. Let's get the very latest now as we head right over to the first word breaking news desk for today's afternoon call. Here he is. Welcome back, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green from the start today, with the Dow currently up 482 points. The S&P's gained 58, while NASDAQ climbs by 200. The U.S. 10-year yield at 0.66%, gold trading higher by 19. Transports gained 206 points. And among the main 11 S&P sectors, all were in the green, led by energy, financials, and consumer discretionary. Leaders to the upside in the Dow, Boeing, Dow Inc., and J.P. Morgan, and only Merck fell. In deal news, Devon Energy is buying WPX Energy in an all-stock deal. And in other news, Inovio said their planned COVID-19 vaccine trial is on partial hold. Stock plunged as much as 39% today. And after earnings, Thor Industries rose as much as 5.5% before pairing gains. Wrapping things up, United Natural reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg Times Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, the story, I think it's fair to say that just about everyone who looks at the world of politics and taxes, for that matter, was really talking about was the blockbuster report in the New York Times, all about President Trump's taxes over the past 2 decades, what he paid, what he didn't pay, maybe most importantly going forward, the debt that is coming due. As we were reading this, we thought, who could tell us what this actually means? And we came up with the perfect solution as a team. Laura Davison, congressional tax reporter for Bloomberg. She joins us on the phone from D.C. All right. So, Laura, 9,800 words in the main story. A lot of us read it all. You read it, though, with maybe a different eye than someone who's just like, oh, what are the politics of this? Tell us what jumped out at you here.
So some of the things that it talked about, the business losses, those are sort of ordinary uses of the tax code. But in speaking with a bunch of tax lawyers all morning, there's a bunch of things that they said, that looks a little bit funky, particularly the consulting fees, those so high and going to employees like Ivanka Trump, as the report detailed. They say that is highly unusual and probably potentially could run against some IRS rules. Other things like the Seven Springs estate in Westchester County. He has 2 different ways that he's sort of generating tax breaks off of that. One is through this conservation easement deal where he was able to generate a really big charitable tax deduction there. Lots of questions about whether the property was really valued correctly. The IRS has identified that sort of transaction as one that's ripe for abuse. So a lot of questions there. Also, sort of on that same property, Trump has listed it as an investment property for business purposes, for tax purposes, but also publicly, and the Trump sons have said, oh, this is our family compound. On the Trump Organization website, it's listed as a family retreat. There's some discrepancies there about how it's being viewed kind of in the eyes of the tax code and then how they're actually treating it, which were things that would really raise red flags for IRS auditors.
One thing that jumps out is it also said he earned $73 million abroad in his first 2 years in the White House, including from authoritarian-leaning countries, as you point out in your story, such as the Philippines and Turkey, despite a pledge that he would pursue no new foreign deals while president. That's a big no-no.
Yeah, and this is one thing that Democrats in particular are leaning in really hard saying. This is why we need to see, more of his, the full extent of his tax returns. We need to have more financial disclosures. They're really pointing that as to, something that could be an issue. There's also, some saying, look, this could be an issue for Trump in terms of him leaving office. He has all these connections. There's been a lot of kind of confusion and question thrown into, will there be a peaceful transfer of power? And this sort of adds another layer of sort of confusion and murkiness around that about what Trump's ties may be to the presidency, to his businesses, and to why, kind of the stake he has in staying in the Oval Office.
So, Laura, as you were talking to tax experts today, and I guess you were texting with them last night, as we all were, trying to sort of figure out what this all means, as you had those conversations, how much of a tone of there was like, look, this is what rich guys do. They hire a bunch of
Right.
lawyers, they hire a bunch of accountants, they pay as little tax as possible, and this is just kind of an extreme example of this.
I think it's a little bit more than an extreme example. They're sort of, really using the tax code, to your advantage. And then there's maybe crossing some lines here. As the Times article details several things that tax lawyers said, hey, look, this is really beyond what I would advise my clients to do. But kind of in the bigger picture here, this really is a demonstration of how there are sort of parallel tax codes. One for sort of just, quote, average people who earn salaries versus if you have, a lot of different businesses and lots of different entities and, can employ some smart tax people, you can really save a lot more and pay a lot lower rate than someone who is, just filing with H&R Block.
But these are his actual tax forms, because it's interesting in your story, you know, that a lawyer for the Trump organization told the Times that, quote, most if not all of the facts appear to be inaccurate. I mean, they are reporting off of his tax forms.
Yes, they didn't validate the forms with the Trump organization. They decided to protect their sources to keep those in-house, but they detailed, all the different information that was listed on those tax forms. So there seems to be a discrepancy that I'm not privy to between the Trump organization and the Times. But the Times says that they obtained the forms from a source that legally had access to them, and that they verified the numbers, through reporting on their own.
What about the $300 million in loans? Obligations for which the president is personally responsible that are going to come due, I think, in the next couple of years. What do we know about that?
So there's a lot of questions there about where those loans are tied to. Nancy Pelosi raised that today, House Speaker, as one of her concerns of, who has those obligations and how might he be beholden to those debtors. The other thing, too, is just sort of bigger picture. You look at Trump has a potentially very precarious financial situation going forward. He has these loans that will come due. He potentially could have a very big tax bill from the IRS. There's lots of questions about sort of his financial situation and sort of, particularly if he's still in the government, what incentives he might have to make sure that he doesn't fold. He doesn't have to file for bankruptcy.
Right, exactly. All right, Laura Davidson, great context. Thank you so much. Congressional tax reporter for Bloomberg, joining us on the phone from the nation's capital. Everyone trying to break down what it all means and what it means going forward, Carol.
As if 2020 couldn't get any more stranger.
Oh, just wait. We've got
I
time.
know.
We've got less than 100 days to go, but still plenty of time. We got little less than 40 days till the election.
Plenty of time.
Plenty of time for some more shenanigans. Don't you worry. Don't you
worry your pretty little head there, Ms.
Exactly.
Nassar. I knew where that was going.
No, didn't say it.
I know, but you thought it. All right, coming up, we've got the chart of the day, the song of the day. Oh, we don't have the chart of the day because Dave Wilson's off, but we've got another treat for you, so stick around. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we are going to hear a tease about an upcoming special from our beloved Lisa Abramowitz, talking about Generation Interrupted, some of the knock-on consequences of this global pandemic.
Yeah, we saw this after the financial crisis, and here we go again. So we'll get to that in just a moment. First up, back to your top business stories. Another check on that trading day. 29 minutes to go, Charlie Pellet.
Indeed, we've got the Dow, the S&P, and NASDAQ holding close to session highs. Right now, we've got the S&P up 53 points. That is a gain of 1.6%. The Dow's up 438, up 1.6%. NASDAQ up 179. That is a gain of 1.6%. 10-year down 132nd now with a yield of 0.65%. Stocks higher after 4 weeks of declines. Banks leading the S&P 500 index toward its biggest gain in 2 weeks as investors find buying opportunities after the gauge fell to its lowest since July last week. Gold up right now by 0.9%. Spot gold at $18.78 the ounce, and West Texas Intermediate crude oil is up now by 0.7%, $40.54 a barrel. Uber Technologies is considering a purchase of Daimler and BMW's ride-hailing joint venture Free Now, a deal that could boost its market share in Europe and Latin America, this according to sources. Uber, meanwhile, is breathing a sigh of relief after it was offered another chance in its biggest European market by a London judge who granted the company an 18-month license to operate in the capital. Uber shares, they're up now by 3.1%. Crosstown San Francisco rival Lyft up by 2%. 3:33 on Wall Street. That means it's time now for the Small Business Report. And here's John Tucker.
Small businesses in New York City hoping for a return of office workers and tourists. Well, they're not seeing the traffic they'd like. At Sweet Catch Poke, with 5 locations in the city, the owner there, Frank Vellucci, has been trying to get rents reduced to stay afloat. Are customers back in any significant numbers?
We have seen a little bit of an uptick, but it's very minimal. I think we're down 95%. Now we're just down 80%. One of our locations, we have now extended the hours back to the normal hours and see how that's working.
So what are you doing at this point? I mean, how much of a pivot can you really make?
Yeah, at this point, we were able to get some of the PPP money. That has run out. And then I took out some of the small business emergency loans. Eventually that's going to run out as well. Until things get back to normal, or whatever that new normal is going to be, businesses are going to be hard-pressed to continue. And it's a struggle. I negotiated with 4 of my 5 landlords, which looked like good deals at the time, but now they're not workable.
Is there a firm date by which you have to make some tough decisions?
I think if landlords are willing to work with me, I can last longer. But if they're going to insist on a set rent based on pre-COVID numbers, then I'm out of business.
That's Frank Vellucci, owner of Sweet Catch Poke restaurants in New York City. I'm John Tucker, and that is your Bloomberg Small Business Report for today.
And John Tucker, we thank you again. Recapping equities higher right now with the S&P up 51, up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the coronavirus pandemic, certainly a public health crisis, no one will deny that. And it's an economic crisis as well. That's felt by millions across the country. But the pain hasn't been distributed equally. The youngest members of the workforce, well, they've borne the brunt of the fallout and could face permanent damage. We have seen this movie before. Bloomberg Surveillance co-host Lisa Abramowitz, she tackles that topic in a Bloomberg television special report airing this weekend called Generation Interrupted. Here's Lisa with a preview of that special.
No demographic has been untouched by the coronavirus, but so far, when it comes to job loss, the youngest workers are feeling it most. As business activity slowed in April, unemployment peaked among those 16 to 24 years old. That group experienced an unemployment rate nearly twice as high as the rest of the country.
It's the personal contact jobs, they're restaurants, they're retailers, they're amusement parks, and those jobs are disproportionately held by hourly people, part-time people, and importantly, by young folks.
I spoke with Richmond Fed President Tom Barkin about the issue, which he says is central to the current economic crisis.
These are starting places for people in our economy. In addition, there are a lot of people who are in school who use these jobs to help pay for school. And so whether it's you're getting started or you're just trying to fund your future, these first jobs really do matter.
When it comes to life's outcomes in terms of wealth, research from the Richmond Fed shows one of the biggest drivers is where you are at age 23. There are multiple studies showing the detriment of entering the workforce during a recession. And this time, when the dust settles, Burkham thinks many of the jobs lost may not come back at all.
It's not hard to imagine a scenario where a lot of these jobs do go away, where people decide to automate personal contact, or many of the small businesses and restaurants that have been threatened or closed. And in that case, we've got a whole population that's going to need a new set of entry-level jobs. And I don't think this is as easy as putting everyone into technology or putting everyone into construction.
The labor market will surely bear scars from the pandemic, and younger workers may be forced to retrain or change careers to adapt.
To the extent you have an interest and affinity for technology, those skills are very much in demand, and certainly everything looks like that will continue to be in demand. I'd also say skilled trades, anything around working around the house, fixing cars. If you have that kind of affinity, that's another place that for sure we have needs now, and I think we will in the future. And then the third place I'd point to is healthcare.
For Richmond Fed President Tom Barkin, the economic recovery won't quickly replace millions of jobs lost by young people. In the interim, they'll face substantial uncertainty and could suffer permanent setbacks. For more, join me on Friday at 7 p.m. Eastern for a Bloomberg Television special report, Generation Interrupted. And tune in tomorrow at the same time for part 2 of our Bloomberg Radio series. In New York, I'm Lisa Abramowitz, Bloomberg Radio.
And of course, that was Bloomberg Surveillance co-host Lisa Abramowitz, which is a special report she's got coming up on Bloomberg TV. It's going to be airing this week called Generation Interrupted. And you can watch the entire special. That's coming up, Jason, Friday night at 7 p.m. Wall Street time on Bloomberg Television. But This is something we talk about a lot.
Totally, yeah. Highlights here on this program throughout the week of that special by Lisa Abramowitz. So looking forward to hearing more of those interviews and understanding what's underneath all this, because it is a complicated economic situation. We know that, and I feel like, to your point, these are some of the things that Sandro Galea was talking about, the inequalities of the system, the disproportionate effect, especially when you think about and I go back to what he said related to, you view this very differently and you view the economic consequences very differently if you're working from home and your income hasn't really been affected dramatically, if you can still go to work. So I dare say it's almost like it's a K-shaped recovery.
It's a K-shape. Thank you very much, Professor Atwater and William and Mary.
Channeling Peter Atwater here.
Well, but it's perfect. It really does describe what's going on. Like we said, initially we were like, okay, it was the great equalizer, COVID-19. We've turned out it's not even close. So check out Lisa's special. But, we talk about what will happen to this generation and how much they're set back as a result because of the pandemic. All right, let's get back to world and national news headlines for that. Back over to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol. Congressional Democrats are expressing concerns the nomination of Amy Coney Barrett to serve on the Supreme Court could mean the end of the Affordable Care Act, since the ACA case will be argued just after the election. Senator Dick Durbin tells MSNBC he wants to ask Coney Barrett what her reasoning would be to get rid of the health care plan.
The bottom line is the American people have come to rely over the last 10 years on the Affordable Care Act. And if then Justice Barrett decides she wants to eliminate it, I want to know her constitutional reasoning, her legal reasoning behind it.
Durbin says he's also concerned President Trump wants Coney Barrett on the court quickly in case there are legal challenges that come up concerning the election. Well, not everyone on Wall Street is convinced that a Democratic win in November would be bad news for the markets. Bloomberg's Nathan Hager reports.
Several strategists have said a Joe Biden presidency and Democratic majorities in Congress could pose a headwind for markets because of the threat of higher corporate tax rates. But Credit Suisse equity derivative strategist Mandy Hsu says a Democratic sweep in November could be the best case for risk assets. She says the chance of higher deficit spending under that scenario would outweigh other concerns for equities. Hsu's worst case would be a Biden White House with a split Congress. She says that would cut the chance of further fiscal aid and lead to a stalled recovery or prolonged downturn. Nathan Hager, Bloomberg Radio.
House Speaker Nancy Pelosi says the White House will have to agree to much more spending for a fresh round of stimulus if there's any hope of striking a deal before the election. She says she's been having daily discussions with Treasury Secretary Steven Mnuchin as they try to craft a deal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser.
Jason Carroll.
Putting it all together. Jason Carroll, Kelly Masser here with you. Interesting. One of the most read. Yeah, it does. It does sort of work.
Okay, anyway.
Okay.
Do you want to talk about this story?
What's that?
Do you want to talk about this story?
Yeah, let's talk about this story. Okay. It's interesting. We talk about these sorts of things with Vince Signorella and Gina Martin Adams, sort of rotation and safe havens and defensive strategies and hedging. It feels like everything else in our lives, it's all out the window.
Yeah, yeah, those normal correlations. And that's exactly our Joanna Ossinger. She wrote this story. Safe haven assets seen as traditional hedges, they aren't panning out as they once did. And she's talking about some thoughts from JP Morgan Chase specifically, and just talking about these easy money policies that we've seen from the Fed, kind of nonstop ongoing, may actually be keeping investors in cash and away from other traditional buffers. They put out a note on Friday, and that's because such policies create a zero yield environment where cyclical assets might be too difficult to hedge. So that complicates things, right? You might not be so willing to do that.
Right. And it might not be the strategy that's actually going to work as a counter. You know what I mean?
Yeah.
And the whole notion of a hedge is like, all right, well, if this thing happens, at least I'm protected over here. But it's harder to get protected, especially as things sort of decouple and the traditional ways that you would expect things to act, they just don't act that way. And safe havens, gold has been interesting to watch.
But we're
obviously.
talking about treasuries, yen versus the dollar, Swiss franc versus the euro. Gold have done very little or even fallen.
Right.
Despite the fall off in equities, right?
So, yeah, not surprisingly, one of the most read stories on the Bloomberg today. Check that out. We're going to get you to the close of trade.